All right, everybody. How are we doing? How's everybody feeling today? We have a good session with Matt Maley, Chief Market Strategist at Miller Tabak, also lead trader at the Benzinga Stock Picks Inner Circle chat room. And right now he is in the session live with the members, but I just want to show you this because he's going to be here with us in like 1 or 2 minutes or so. Let me just share the live session here. All right, folks. So today, basically, once Matt comes here, we're going to be talking about trade ideas, education, setups, a whole bunch of stuff when it comes to trading. Very important for you to know. Also, a current market analysis of what is happening, how to trade it, more importantly, right? How to profit from all this. So as soon as we get Matt Maley here, we're going to be good to go here, guys. All right, so you can see that right there. So these are some of the trades that Matt has been making today, but we are getting Matt here in the session. 1 second, folks. All right, so yeah, so we're gonna have Matt Maley here in a minute or two. I just got off a quick message there, so um, thanks for the patience here, folks. We're gonna get Matt here in a quick second. What's up, Jono? Let's see. We actually have a pretty good, cool crowd here. Benny, what's up, dude? Bonnie, Charles, Derek, Edward, Fernando Ochoa, what's up? Frank, we got Lewis from Florida. What's going on, man? Mary, Matt, Mike, Patrick, Paul, a whole bunch of. Okay, I know a lot of people that are here in the chat. Several members here. What's going on, folks? Yeah, we're just getting that Matt is having some issues with Zoom. I guess Zoom is maybe but yeah, we're just waiting on Matt here to get on the Zoom link. We already sent it to him. Um, so any moment he could pop in here. I'm not sure whenever he wants. But in the chat, give me a couple of tickers that you guys are looking at, and what do you think right now about the GDP numbers, all that stuff? Like, what are you looking at in the markets? What's making you think about the markets right now? And then maybe Matt can address some of those things when he gets here. Kenyon from Maryland, what's going on? I know a lot of people from Maryland. It's a fun place there. Yep. Yep. We're getting Matt here set up in a bit. Google, did they already split? Letitia, do you know? Not yet. What is MPLN, Matt? What is that company? I've never seen that ticker. July 15th. Multi-plan? What is that? Like plan B? 1 second, folks. All right, I'm getting Matt set up right now, folks. Just need like 30 seconds or a minute. All right, ladies and gentlemen, I am proud to announce that we were able to bring here the man of the hour, Matt Maley. And we're gonna get him set up here right now. So we were able to get him up. Some issues with Zoom, but I think we're all good to go here now. You hear me there, Matt?
There we go. Sorry about that, everybody. We were in the chat room right here until right to the close with a lot of things going on. So I apologize for being a little delayed there. My fault. Anyway, let's get started. Well, needless to say, there's all sorts of stuff going on in the market here. Let me get my screen shared here so we can get right into it. There we go. There we go. And hold down a little bit. Okay, hopefully you can see that. See my screen, my Bloomberg up nicely. Okay, good. Let's just, well, what I'm going to do here today is just, we got, a lot of stuff's going on, and we're heading into a ridiculously important time for the market. Now, next week, of course, is the 4th of July week, holiday weekend coming up. We got next week, a lot of people will be away. And a lot of people aren't going to be doing a whole lot. It's going to be interesting because it might be an unbelievably great time to do some trading because the market's going to be thin, but we will have to be very, very careful. Hi, everybody. Yeah, thanks, buddy. What's that?
Computer tray.
What?
The computer tray that you wanted that you had.
No. Oh, no, I wanted the tray to get in, my key fob.
No, I have that. Yeah.
Yeah.
That's
Sorry about that.
a spare tray.
Okay, great. Thank you.
Can use that here.
Okay, great. Sorry about that, everybody. Appreciate it. But we're doing things in my office. But anyway, so let's get right to it. So, things could be interesting next week. The market's going to be quiet. Friday is going to be really interesting because it's going to be dead quiet. We get the end of the quarter tomorrow. So as much as the individual investor is
Right.
I'm sorry?
No, yeah, no, you're right.
Can you hear me okay?
Yes, can you hear me here?
Yeah.
Right.
Okay. Anyway, so what we got going here is we're going into earnings season. Next week we'll see what happens, but the week after that we're going to earnings seasons, and it's going to be very, very. First of all, we're going to have individual stocks going to see some big moves. That's going to create some unbelievable opportunities. And if some of these earnings estimates start to come down, it's going to cause some problems for the market. But there's a lot of things facing the marketplace. It's going to create a lot of volatility the rest of this year. It's going to create a lot of opportunities for us the rest of this year. And I can't tell you how we're not going to get the summer doldrums. If we get them at all, it's going to be early August, maybe. And for a short time or maybe the first week in August, or maybe not even that, maybe the very last week of August before kids go back to school. but there's a good chance that that's not even going to happen. So let's get right to it. I mean, well, first
Right.
of all,
Really
go ahead.
quick here, Matt, before we do get into the full session here, for those that are not familiar with Matt, right? Because there are a lot of these Stock Picks Inner Circle chat room members here, but for those that are maybe seeing you here for the first time, Matt, if you can do just a brief introduction of your 40-year experience in Wall Street so that they can more or less, see where you're coming from and what we're doing here.
Absolutely. The one of the things that I think makes me a lot different than a lot of people on Wall Street is that I'm the strategist at Miller Tabak. You may have seen me on TV. I was on I think 3 times this week. CNBC Asia. I'm going to be on CNBC tomorrow, probably around in the 1:30. I mean, it's the 2 o'clock hour. I can't remember, but I'm going to be on tomorrow on CNBC. I was on Bloomberg Radio yesterday morning, Bloomberg TV the day before that. So again, I'm out there. I have a very nice following in the institutional side of the business, and the reason why I have that is because my background is very unique when it comes to strategists on Wall Street. I worked my first 15 years at Salomon Brothers. If you've ever read the book Liar's Poker, you should definitely check it out. If you haven't, it's a story of the old trading days in the 1980s, 1990s, which were crazy fun days. But at that time, Salomon Brothers, some of you may not have heard of it, but back then they were the most important trading desk on Wall Street, both stocks, especially in bonds, but also in stocks. There are other firms that were bigger in terms of overall investment banks like Morgan Stanley and certainly Goldman Sachs. But Morgan Stanley's trading desk wasn't very big back then. Goldman's was, but Goldman and Salomon were the two biggest desks, and Salomon really leading the way. And so you really learned. I did 15 years there, and then another 10 years on the biggest trading desk on Wall Street, which was Merrill Lynch. And over those 25 years of trading, I spent time covering the biggest, the institutional trading desks, the biggest mutual funds like Fidelity, the biggest hedge funds like BlackRock, insurance companies, banks, you name it. I covered them, and some of the best and most important ones, many of the biggest and most important ones. And so you really learn about what really moves the markets, not what the theoretical stuff. Most strategists today, they were either economists or maybe they were analysts. And there's nothing wrong with that. But those people focus on the textbook, what should happen. And one of the worst old sayings in the marketplace is that the market is always right. That's ridiculous. Well, actually, the market is always right, but it's only always right eventually. Okay? Things are wrong all the time. I mean, the stock market was dead wrong at the beginning of this year. It was dead wrong, at the bottom in 2020 during the pandemic. So there, and we see it with individual stocks get way ahead of themselves and way knocked down. And that's the whole thing. That's as a former trader. Now I've been a strategist for the last 10 years, although I've continued to do a certain amount of trading, not as much anymore. I don't trade for the accounts anymore. But what we do, but I did it up until in the last couple of years. Again, I see what's really happening, what's going to happen now, not what theoretically should happen 3 to 5 years from now. Now, everybody should have one of those, a big chunk of their portfolio, those long-term trades, long-term investments that they really like over 3, 5, 10 years, or even longer if you're young. But for me, you can also maximize your returns by trading, being an active trader. And if you have the time and the inclination to do it, it can really help you maximize your gains, especially in today's market because of all the volatility, number one. Number two, because we now have the tools to do it with. We have weekly options in individual stocks. Even in the bear market, the deep correction of 2018, I guess it technically wasn't a bear market, they were around, but they weren't anywhere near as liquid as they are now. But now we have weekly options in all the big cap names and many, if not most, of the medium cap names. So if you want to go out and you have an idea, it's like, geez, I really want to buy the call options in Apple Computer. That's great. But you know something, you're gonna have to pay a lot of time premium because it's the end of June, and 15 years ago, you would have to buy those options with the September contract. That's a lot of time premium you're going to have to pay for in those options contracts. Now you have weekly contracts, so you're paying much cheaper. Now, that's the thing. If you want to make a long-term bet, you can still go out that far. If you want to make something, when I say an intermediate-term bet, one that goes out a couple of months, you can still do that. But if you have I really love Apple over the next 2 weeks, and you had to pay a huge premium. You had to be really right to make much money on it. Where nowadays you only have to go out. Today you buy it for Friday's expiration, or maybe a week from Friday's expiration. Didn't have to pay that time premium. We also have index ETFs. We have leveraged ETFs, inverse ETFs. All of these, especially on the index side, have very active options. Most of the group ETFs have very active options, like the XLK tech ETF, or the SMH semiconductor ETF, the KBE bank ETF, etc. All these things are very liquid, and we can take advantage of them. In the old days, it was only the big institutions that could make negative bets. But my point is that not only we can now make negative bets, but we can also make active positive bets on a short-term basis. Again, only those institutions could do it in the over-the-counter market for many, many years. And so we now have the opportunity. We're in an unbelievable time in the stock market. People are losing money left and right. We've been making money this year. We don't make money every single time. This week I had a bet on NVIDIA that would go higher. It worked for a very short time, and then it rolled over before I could sell it. I sold them at a loss. But we had a very, very nice bet in the XLE, which is the energy stock ETF. Bet on that nicely, made 150 to 200% gains on that one, depending on when you sold it. But when we go in and make these calls, I come in, at least with the ideas that I have in the chat room, we come in and we give you exact trades. We tell you what the trade is, what we're looking to trade, whether it be an individual stock like an NVIDIA, or an ETF like the XLE, or an index ETF, or like the SPY or the QQQ.
Right. Clear entries and exits.
Exactly. So we give you the exact entry, the exact strike price, the exact expiration date. I tell you when to buy them. I don't tell. There's no delay. There's no delay. I don't buy it and then wait a couple hours. And then when I get out of it, it's like we're selling them now, or we're selling half now, and then a couple hours later, we're going to sell the other half. We're out. You get the exact time.
Right. So 25 years as a trader, Merrill Lynch, Solomon Brothers, and as an analyst as well, 15 years there at Miller Tabak. So a lot of people also here know you from the CNBC or Bloomberg interviews. But for those that don't know, you actually have a live trading room where you're actually doing that. Just for those that are just popping in here,
Right.
Coming out of somewhere else or anything.
Right. We have a chat room, and we're talking all day long. I mean, people start talking early, and I start talking at usually around 9 o'clock. And today, obviously, I didn't usually go to about 5, but today we want to do this webinar, so we started. I did hop off the chat room right after the close, but that's why there was a little bit of a delay for me getting on at 4 o'clock, because the market closed right at 4 o'clock. So, but the point is, I'm there all day long, and we're talking about the markets. We're not only just giving ideas, we're talking why we're doing stuff so that people can learn. We do a lot of training. I say training, but give ideas and explaining why you do stuff. What's this? What the heck does that mean? People, the one thing we say in that chat room, there's no such thing as a dumb question. Ask the question. There's many things that for very smart people, it's just a matter of being told what it means. If you don't know what it is, how can you know what it means? So things like that. But and we do a thing, not only do we're in this chat room and talking about trades, talking about groups, talking about the broad market, why I think what's going on or what's going to happen, why I think what's going to take place in the next few days or the next few months, or even the next few hours. And I tell you why, not just, hey, I think the market's going higher, buy this. I think the market's going higher because of this, or I think the market's going lower because of this. And we learn, we look at fundamental aspects. We look at the technicals, we look at the charts, we look at sentiment readings, we look at correlations between different asset classes and different stocks, et cetera. And on Tuesdays, we do a Zoom call, much like this one. It's funny, we started off, we were going to do it for 20 to 30 minutes. Yesterday, I think we went for an hour and 10 minutes. So it's a great opportunity to talk about things. I have my Bloomberg up like I have right now, and I'll put up, and we'll look at charts, and we'll look at all sorts of different things, not just charts, but of stocks, but maybe charts of for instance, like we've all heard in the last couple of days how consumer confidence has fallen out of bed. You can I can pull that chart up, and so people can really see. Oh my God! Look at how this has completely gotten crushed lately. And pictures worth 1,000 words, etc. So that's what we're looking at talking about. So we're not just talking about all day long. We're not just saying good ideas. We're talking why. And it's a great community. It's a small community. We don't have 10,000 people in it like some of these crazy chat rooms, and you don't have no idea who these people are. We are a small group, but we teach each other, and believe me, there are ideas that have worked incredibly well that were not mine. Sometimes I didn't, sometimes I said, hey, that's a great idea. I'm jumping right on that. And have other times where I said, that's a great idea, but I'm going to hold off. And then I kicked myself the rest of the day because the people made a huge profit and I missed on it. And that's the other thing too. I'm not, I'm in the chat room. I'm not the investment advisor of everybody in the chat room, of anybody in the chat room. I'm there to give trading ideas, and you can take them or not take them, which is fine. But you get those entry and exit points, specific ideas. And where other places they just say, hey, I like the oil stocks. They look like a good buy here. Then you've got to figure out, maybe if I want to buy, do I want to buy the ETF? Do I want to buy a specific stock? Do I want to buy call options? Which one should I buy? Types of things. We try to be very, very specific on that. But again, and we also give the reasons, because there's a lot of convoluted rules that don't necessarily make sense until you have somebody who's experienced to explain it to you. I mean, it's like, if everybody's buying, it's funny, if people are buying a call options in something, especially if it's a big block, they're like, what does that person know that we don't know? Why are they buying all those calls? Do they know there's a takeover coming, et cetera? So we can kind of use that and that's bullish. In other words, people buying calls is bullish. But then on the flip side, when you get a lot of small people buying calls and it's just out of control, that's actually a sign of a top. Then it turns from very bullish to incredibly bearish. And how would you know that necessarily if you haven't been trading before? So it's the type of things that I try to teach people in the chat room, and others, and others do the same thing, teaching people, highlighting certain things. I mean, one of the big things that we've been able to do really well with, like, for instance, the high yield market, and how the breakdown of, the sell-off in the high yield market enables us to make some money in some negative bets. And then when it became extremely oversold in the high yield market about a month ago, we were able to use that and some oversold readings in other areas, and some good sentiment readings to buy the market and make some real good money there. So it's a chat room that has become very, very profitable. Like I said, we don't make money on every trade. Anybody who says they make money on every trade, run from them as fast as you can, because nobody can do that, except for Bernie Madoff, and we know how he ended up. So we'll just be honest with you. I mean, not everyone makes, but the whole idea is to make these make some real good returns on the ones that we do well in, let them ride, let them make a lot of money, and kind of try to minimize the losses on the ones we lose. We want to bat way over 500. Batting 300 or 350 in the Major League Baseball is great. You don't want to bat 350 in stock trading. We've got 700, 800. But the big thing is that we hit a lot of home runs, and we get a chance here, I'll show you, give you many examples where we've had consistent big winners on almost a weekly basis for several months. And I think we're heading into a time frame. I don't know, the next day or two, especially right in front of the long weekend, might be quiet. We'll see. It could be active, but might be quiet. But when we go through earnings season, it's going to be lots of things going on and lots of opportunities to take advantage of.
Right. So let's go. I know, look, it's been for some retail traders, it's been a tough market, right? So I think that it would be good to show them really what you're doing with this group, right, of traders, and more recently, right, what's going on there.
Right. Let me just let me pull it up here. I apologize, but I've got some charts to show you what we've been able to do in the chat room. In these are specific trades, when we bought them, when we sold them. And excuse me here, because I had to rush to the market closing to jump on this thing. I didn't have this set up in advance. It'll only take a second. Only take 30 seconds to get this, not even that much. But the point is, we've been doing, we've had some unbelievably huge trades. They've made literally over 1,000%. Those, you don't make those every day, but we've had a lot of others where you literally make three-figure, in other words, 100%, 200%, 500% returns on trades. In some cases, just over a few hours, but in most cases, it's over a couple of days, and sometimes a week or two. This is the active trading part that I'm talking about. Yes, we can do some trades that work out to over 3 or 4 weeks, but most of the options trades we tend to do over several days, or even and then late in the week is kind of a good time to do some trades. But let me show you here. It's just bringing it up now. It's just kind of filtering in here, and I'll give you an idea, and I can show you exactly what we did. And these are all, the other thing just to say before, as these things are popping up here, hold on here, let's just see if that's perfect. Okay, so yeah, what we do is that we, through this chat room, we also have a second page. It's called Matt's Important Messages. And the vast majority of things I post in there are my trade ideas. In other words, when to enter a trade and when to come out of it. Once in a while, I'll also put a couple of other ones in there. But I guess the point is that, when we first started doing this, I'd put a trade in, hey, there's a great idea. But what happens if you're going to the bathroom and you didn't see it? It's like, wow. And we quickly realized, okay, this is going to work. We need to make sure that people don't have to scroll through, dozens and dozens of posts to figure out when I put an idea out there. So we have a separate page. So if you're going to the bathroom, if you're taking your kid to school, if you're at your office and you're doing work and you're in a conference call or you're doing something else, and then when you come back, you can see what trades we've done. It's not like I fill 30 trades a day. We do a couple of trades. Usually, I can't think of a time I haven't done any trades, but sometimes we just do a few trades. If it's not there, we don't just trade for trading's sake. Sometimes you want to sit on your hands. But let's get to what we're talking about. Where the rubber meets the road, we've been able to do. And I'm just going to start with this week. What we did this week in the XLE, and then I'm just going to show you other trades we've done literally every single week for many weeks. XLE, this was the again, that's the ETF for the energy stocks, and I thought it was getting incredibly oversold and overhated. And it's funny because on a longer term basis, I turned bullish on the energy stocks way before anybody else did in October 2020. And, everybody else is still patting themselves on the back for being early, but they missed half the move. Okay. Because they, instead of October 2020, they jumped in January 2021. And believe it or not, they even though they were up 50%, we were up from more than 100%. And that's with no leverage. That's with no options. That was just with the XLE and the XOP, which are the two major ETFs. Anyway, but there have been times along the way where I've said, we need to walk away from this group. I love them long-term, but we need to walk away and even make negative bets. At the beginning of January, beginning of June, we made that play. We bought some puts on the XLE, made some real nice money. But as we came into last week, I said, okay, now this sell-off has become overdone to the downside. And I looked at some technical issues, sentiment issues, and I disregarded some of the, and I also like the long-term fundamental aspect of it. So we came in and we bought these XLE. Again, whoopsie, sorry about that. There we go. We bought these, I just want to move this thing because I have a thing you guys can't see. Okay, there we go. Okay, so we bought these the other day, the XLE, June 30th, which means the Thursday. It's funny because the reason why they did this because it was end of the quarter. Usually they all expire at week's end. But this one, because it expired tomorrow, and we sold it before it expired. But we bought the XLE, June 30th, strike price, very specific, $74 call. Okay, we bought this in the afternoon. Again, this one, because I couldn't get the exact time stream, I have to admit, this is, the other ones are going to be quite specific on how much money we made. This one is a little bit of a guesstimate. We didn't get the exact high, so we didn't make 186%. Okay, but we came in, we sold some in the morning here, and we actually made about 150% on half. Then we sold the other half, and we actually bought that one at a lower level the previous day. So some people made as much as 200%. But you can see this is still very representative. I'm not, if anything, I'm on the low side, 186%, literally in 2 days. Okay, not even 2 days. It was in a bottom in the afternoon, sold them in the next morning. Okay, and then they sold off. People were asking me after that. I just said, I don't want to get greedy. I thought that the XLE could get to 77, and people asked me, and again, when we did the trade, I said, this looks really good. I think it can go to 77. When it got to 76, and again, this thing was trading at, the QQQ at the time was trading at like 73. So when it got up very close to my target level, I said, let's not get greedy. We've made a lot, let's get out. And sure enough, again, this is exaggeration. We sold it more in here. So we didn't get the exact top, but you can see how it sold off the rest of the day. We got out at a very good time. But, so what else? Okay, great. That's great. That's one trade. What'd you do before that? So here was the earlier in the month. Remember, I talked about how I turned negative on the XLE. Okay, and this was over a couple of days. We bought the XLE June 17th, $90 put options. This is way back on June 8th. Okay. You can see what happened over the next couple of days. Now we bought them on a Wednesday, Thursday, Friday. Then we had the weekend. You can see down here it says June 10th, then Monday, June 13th, obviously 11th and 12th for the weekend. And the market opened strongly. We sold half of our options for a 564% gain. Okay. Then we sold the other half. I thought it might go higher. It didn't. When it bounced back, we sold them for 470. So we sold them for over 500% gain, over a 500% gain over 4 days. Okay. And again, you don't want to, we didn't want to get greedy. They didn't expire till later in the week, but I'm like, I don't know how much more of these can go on a short-term basis. It's time management. People, there's nothing worse than having something that's up 200 or 300%, then you sell it for a loss. Oh my gosh, it's so tough. I'd rather sell it for up 500% and be mad at myself when it goes up even more. I mean, that's people get mad at themselves over that, or literally if they get mad for very long, they're not going to. They shouldn't be doing this because it just doesn't work that well. Okay, again. Okay, that was the one I just showed you. I'm sorry. Okay. Now, another thing, June 17th, we did this back earlier in the month. Now, these are the June 17th calls. Okay, the trade wasn't the 17th. We're talking about that's the expiration date. But again, the SQQQ, the call options are actually a negative bet on the market, on the QQQ, which is the S&P, I'm sorry, which is the NASDAQ 100 ETF. So since it's an inverse ETF, buying calls on it is actually a negative bet. So we came in here, again, we saw that the market had become overbought on a short-term basis. I didn't like, we were going into the weekend. I didn't like the way the market had gotten too far ahead of itself. So we went ahead and bought those puts. Bought those call options, which again, act like puts on the QQQ. I said, well, why didn't you just buy the puts on the QQQ? The reason we did that is because this is a 3 times leveraged ETF. So we get a little bit more juice, a little more bang for our buck. So sure enough, the next day, market came in, we made 200%. Okay, so that's 3 times your money, right? 100% is 2 times your money. 300%, right, by mid-morning. And then at the end of the day, we were up 270%. And I was like, ugh, I don't know how this thing's going to play. And we did sell. We didn't get the exact high, but we got almost the exact high. And I was like, this thing may go higher tomorrow. In other words, the QQQ might go lower tomorrow, and the SQQQ might go higher tomorrow. But on 274% over a weekend, we had to sit on them over a weekend as it was. I wasn't taking anything. But again, here's something that was just a couple of weeks ago. So I showed you what we've done this week, then last week, and then just a couple of weeks ago. This is a similar thing. This was the same thing. We did buy, it's funny, because we did buy some QQQ puts also at the very end of that day. Okay, but the index options expire 3 times a week, Monday, Wednesday, Friday. So this was a short-term play. I'm like, geez, I think these things are really going to get hit on Monday. So I liked having a little bit, because the SQQQ options only expire every week, once a week on Friday. We had that exposure already. So a little bit later, not shortly thereafter, we also bought some some regular QQQ puts that expired on Monday, just a day later, because I thought the market was way ahead of itself. So instead of going out to the 17th, we went to the 13th, the $285 put options, and sure enough, we sold them not long after the opening with a 500, almost a 600% gain. And again, we don't make it on every single one. I did it again. I went in the wrong directions. Here was another one for June 10th, earlier in the week. Remember, these were the 13th, but earlier in the week, we made 400% on some SQQQ options. But again, those weren't going off to June 13th and June 17th. This was earlier, so we bought them on the 15th. Oops, I'm sure I'm going the right day. Okay, now we're going earlier in the month. Again, each week we seem to make some good plays. Here's AMD, Advanced Micro Devices. We bought, the stock had become very, very oversold. So we came in one morning and we bought them right. It was funny. I bought them too early. I wish I bought them here, but I didn't. So I'm not going to claim we get anybody who gets to get the exact bottom and the exact top on a trade. They'll be, I don't care how good they are, they'll admit they got lucky. So we're not looking for that exact one. But this one I came in a little early, but I was confident that it was oversold enough on a technical basis that it would bounce back strongly. And sure enough, by the next day, midday, we made 146% on the trade, and we took our profits. If we had held on a little bit longer, we would have made a little bit more. I can't Again, if you're knocking yourself out when you make 146% in 2 days, and you could have made 175, then you shouldn't be doing this, because you'll drive yourself absolutely nuts. And then we did the same thing in Amazon. Was the Amazon call? Now, this one was not mine. Okay, I was talking about how I made some really good calls. Well, we had one one woman in the group. She's a great trader, great addition to our group, and she came in and saying, "Hey, I see this Amazon stock split as being something we can really trade off." And I went back and I said, well, first of all, that's a good idea, because stock splits can help the stock. And I went back and did a little of my work on my own. She had already done hers, and I just wanted to double check for my own, for my own sake, which people like to do. I wasn't doubting her; she's a very good trader. And I looked at it and said, I'm going to hold off. Now, I wish I hadn't, because a bunch of people did do it, and look what they did: 520%. Okay, where they sold part of their portfolio. Okay, and then they waited a couple of days later and made over 1,500% gain. Okay, so sold half here and half here. Again, you're never going to, that's one of the things we like to do. We don't necessarily buy it all at once or sell it all at once. Too many people are trying to find the exact, okay, this is the exact time. I'll put, I'll put X amount. I'm going to put X number of dollars. I'm going to buy 50% of it now, or 70% of it now, or 20%. And then once I get to that 100%, then I'll let it run. And when I take profits, it's always, especially when you have a 500% thing, 500% gain, you sell half, you've got a huge profit. Even if for some reason this thing rolls over, goes to zero in 10 minutes, you've got a huge profit. So it's good to, if you think it can run further, to sell a portion and then hold on to the rest. But again, this is something that wasn't my idea. It was somebody else's idea in the chat room. And this is not the only example. We've had several examples like this, or some great ideas from other people. I did it again. Okay, let's go on to, I just want to, and we'll go back to that one later. But again, here now we're going into early May, where we bought the calls of the TQQQ. So this was a bullish call. Remember? Oh boy, I'm just gonna have to turn this off. Sorry about that. So the TQQQ calls, I'm sorry. So this is again the bullish leveraged ETF for the Nasdaq 100. So again, it gave the exact call, the exact expiration date, the exact strike price, obviously whether it's a call or a put. And we bought this one day, and we made over 100%. And it was funny because it wasn't a big position. I didn't say, hey, let's back up the truck here. But we were seeing some things that were going on in terms of breadth. The breadth was looking, the market was down, but the breadth was looking quite good. And when I'm talking about breadth, I'm talking about the number of advancing stocks versus the number of declining stocks on that day. It looked like the market was going to perform better. And sure enough, we went in, we made doubled our money in just a few hours. So I said, something, the markets, we're getting close to the close of the day. Let's get out. And I didn't get the exact top, but I didn't want to wait till the close either. We got just after 3 o'clock and the stock sold off. I'm sorry, the market sold off. And so I'm glad we did. I'm glad we sold when we did. We would have made 110%. Who cares? We didn't get the exact bottom that, we might have been a little bit better if we bought it here. We did get a real good level. And of course, if I had waited to here, it would have been even better. But, again, the same thing. You can't get too worked up on this. And I know we're going to go over these things, but here's another one, was just an intraday play where we made the QQQ calls, and another one in late May. We made 174%. Again, if I'd waited till here and we got the exact bottom, it would have worked better. I didn't get the exact top, but boy, it came very, very close. And but I guess trying to show you here that you'll go. Here's going back. Again, we've done some invert. You can see how we've done real well with those index ETFs. Here's another situation where Apple Computer, and we made 400% in just 2 days. What happened this week? Well, what was going on this week, this particular week in the middle of May, was that the cryptocurrencies were crashing, and people couldn't meet their margin because they were getting margin calls. They couldn't meet their margin calls by selling cryptocurrencies because they just weren't liquid enough. So they had to turn to what they could sell to raise the money to meet those margin calls. So they couldn't, even Bitcoin wasn't enough, but a lot of them own these a lot more esoteric, much less active cryptocurrencies. So they couldn't meet their margin calls. They couldn't sell enough to meet their margin calls. So they had to sell something else. And my guess was that I just saw the way Apple Computer was getting killed. Stock was going down. It was down like 10% in just a couple of days with no new news. I mean, this is Apple Computer. Apple Computer doesn't go down 10% for no reason. I mean, if the overall market's getting crushed, maybe it'll fall 10%, but the market was certainly weak, but it wasn't getting crushed. And I was like, something else has to be going on here. And it's getting oversold on a technical basis. And then I deduced, because I had remembered from previous years, in my last 40 years, I went back to a thing called long-term capital when they went out of business back in the late 1990s. And they were owned all sorts of esoteric bonds, but they owned a huge position in General Electric, which at the time was the biggest and most important stock in the universe and the most liquid stock. And so they were able to sell General Electric. And they had to sell it at any price. Just get me out because I need to meet my margin calls in the bonds. This is what people were doing in Apple Computer. Well, on this day, which on the 12th, I noticed that the cryptocurrencies had stabilized. They weren't getting the margin calls they thought, and yet Apple was still going down. So finally, at the end of the day, in the last hour, I said, "Hey, this stock. I have no idea. I mean, I was bearish on the market, and we know how tough May was, and the market kept going lower. But I said, on a short-term basis, this stock is down for only artificial reasons. The only reason it's down is because of forced selling, believe it or not, in Bitcoin and the cryptocurrencies. Let's go in and buy these." And sure enough, the next morning, it opened strongly, and I said, no, it's going higher. Again, I wish I'd held on to it longer. We sold it at about 11 o'clock. We bought it at 3 o'clock. I mean, obviously, in less than 24 hours, you make 5 times your money, 414%. That is what is just, it's too good to pass up. And again, if you're like, geez, I don't want to listen to you, Matt. I want to find the guy who gets at the exact top. Good luck to you. You go ahead. I mean, I'm not saying I'm the only person people should listen to. I'm not the only one. I'm far from that. But again, it's risk management because, like I said, you don't want to be up 14%, 400%, and then have the stock roll over and get killed. It's all happened to it. It's happened to all of us. But again, I don't overdo this. What I did at the same time, literally the same day, we bought these leveraged QQQ. I figured, hey, if Apple's going to rally strongly, the whole QQQ, the whole NASDAQ's going to rally strongly. And sure enough, we bought these calls. We did the exact date, May 13th, $29 calls, same day, bought them at 3 o'clock, sold them at just before 11 o'clock, 600% gain. Okay. These are the types of things that again, it's just, I'm just giving you more situations here. Again, it's not always in the 100%. Nice little thing where we made over 3 days, we made 78%. That's obviously May, not May, but 71%. I just wanted to show you these situations that they're not all, gazillion percent every time. But again, we're going to earlier May. We made 230% here. Again, more May, but now into April, again, over several days, we made 200% in some SQQQ calls. The VIX call options, because we're worried about the market getting hit. This was over several weeks. We bought the VIX May 18. Now, you can see how it is. This is not the trading date. This was these are the expiration date. But you can see it was in April that we bought them, okay? And this is a trade. It went down, but I don't worry about that when it comes to the VIX. That's a little bit different because you're buying more insurance. But again, it was up over 82%, right, almost double our money, and off we went. So there's we can go on and on and on. But the point is that we've been doing this for quite some time, and we'll show you before we're done. We'll show you our record play that we made in March. But again, this is not just something we've done once or twice. We've done this on a very consistent basis, and almost a weekly basis for several months. And I think that the opportunity is going to be there for us to make these kind of returns in the coming weeks and months.
Right. And I guess you do that. I mean, you've been doing this for 40 years. So when people are asking me here, like, how can he get, those trades? Well, I mean, you've been doing this for 40 years. So it's really for somebody that's starting or learning to trade options, it can seem like, but it's something that happens every week in the chat room.
Right. I mean, and it's the thing. I'm not trying to say that I'm the smartest bulb in the tree. I've had a successful career, and I want to share it with people. But the thing is, unless you could be the smartest guy in the world, but if you didn't have the experience, you would never know. It's like, well, wait a minute. How did you know that Apple was being sold off because to meet margin calls? Because I've seen it happen before, and because I've been doing it for 40 years. There are really smart traders who've been doing it for 5 years or 10 years who haven't seen that kind of move because they haven't seen that big force selling. I had seen it before, so that's how I knew it, through experience, not because I'm smarter than the next guy, but it's like you get that combination. Hopefully, I think I'm a fairly smart guy, and there's definitely smarter people than me. Then you throw that experience in there, and again, my unique position from looking at fundamental backdrop, but also the trading aspects of things, it gives me an edge, I think, over a lot of people. But I just want to go over the biggest trade we had this year, which was the FXI. Now, again, we don't just do here, we do things on the bond ETFs, the HYG, which is a high yield ETF, the TLT, the Treasury bond ETF. We can do it on dollar indexes, and we can do it on foreign ETFs or foreign stocks if you want to too. But here's one we did earlier this year in the FXI, which is the China large cap ETF. And I had been negative for all of 2021 on this group, on this market. And if you remember they started with Alibaba, and then just every month they seem to go out and take out and shoot another industry, and they would clamp down on that industry, and the market is going down and down and down and down and down. But finally, it just started getting crushed. And the reason for that is that right here, throwing on top of all the pressure they got from their own government, the U.S. authorities came and said, "Hey, we're probably going to delist some of these Chinese stocks," and it just fell out of bed. And look what you had here. Again, we're looking at technical aspects. This is the RSI chart, relative strength index. And when it gets down to 30, that's usually a good buy signal. You see how it got down a little below 30 there. It had a nice rally there. That was a nice 20% rally there. It looks small, but it was a very nice rally. Same thing here, got oversold. Same thing here, got oversold. Nice rally there. Got oversold, followed by a nice rally. So even though it was going down, they were seeing some tradable rallies along the way. Well, this one got ridiculous. This is, its RSI chart got to 14, okay? The most oversold reading ever, going back 20 years, okay? So, FXI came into existence. So I'm like, okay, so technically, I don't care what China's doing on a long-term basis. Technically, this is ridiculous. It's got to see a strong bounce, these little bounce. I also use my 40 years of experience to know that when China's stock market gets hit really hard, they come in, the government supports it itself. And I really felt this was the time. It becomes so oversold, they were going to step to the plate. Well, sure enough, so I came and said, let's buy some FXI calls. Okay, whoops. And sure enough, the next day, well, over the next 2 days, it traded 27%. It's not a stock. Stocks can trade. This would be like the S&P 500 trading, rallying 27% a day. Okay, and here it was 2 days, but you can see the first day is see that it was really oversold. Look how much it bounced back, right? Okay, huge rally. Forget this thing that says weekend's updated chart. That's what I wrote back in March. Obviously, this went back then. So, but here's what we bought. We came in on that day, on March 15th. We bought the FXI expiration date of March 18th, $30 call option. The next morning, I didn't sell them right at the opening, even though they're up over 1,000%, more than 10 times our money. But I said, you know something? I think it was so oversold. Not only that, I know the government's going to continue to support things. Sure enough, when it got up almost 3,000%, I said, okay, we got to take some profits here. We can't be greedy. So we took some profits, but I still said, usually I would say, let's get out of all of it. But I'm convinced the government's going to do whatever it can to push this market higher. And so we didn't sell the other half until the very end of the day, when it was up almost 8,000%. There were some people who held on, okay, in the chat room, they said up to, and it's certainly possible because it kept rallying, 14,000%. Again, things like this don't happen every day, but we've certainly had trades like that. There was, as I mentioned earlier, there was also a trade that I did not get involved in, which was remember I mentioned that Amazon trade where people made over 1,500%. And let's see, what did I just do there? Okay, I apologize. Okay, well, let me hit escape here. Okay, so anyway, here we go. I just wanted to pull this back up and see if I can grab it. Taiwan, okay. Hold on 1 second. The other one that we did, okay, here it is. This was the one we had, I mentioned. Then we did last year. So again, we get some of these really good ones. Last year, we had a very similar situation. Now, again, this is 2021 in Viacom, which is now Paramount. But again, remember, this was in early 2020. This is the weekly RSI chart. Look how overbought it got. When it got ridiculously overbought back in 2016, 2017, sold off. 2015 sold off. These are weekly RSI charts. See how it, then, I mean, this is when it got barely above 70. You know, that red line means stop buying. That's why it's a red line. That's why the green line is, sorry, that bottom line is green. It's like, yeah, go ahead, you can buy it now. This had become so ridiculously overbought. 97 reading. I'd never seen anything like that in my life. I said, okay, this is a meme stock. Remember AMC and all these were going up. I'm like, hey, Viacom is, all they're doing is they're squeezing the shorts. There's nothing new here. I mean, it's a good company, don't get me wrong, but they ain't inventing they're not going to save the world with the pandemic. They're going to save us from the next pandemic. They're not going to come up with the next thing to replace the iPhone. They make movies and TV shows, okay? And so I said, let's go in, and we bought the puts on this one, and they went up 5%. I'm sorry, 5,000%. Again, the same thing where I split them up. We got up 2,500%. I said, sell them. And then we got up 5,000%. And I said, okay, that's enough. Let's just get out of them. There were people who said they stayed with them and made over 10,000%. This happened before we had the chat room, so I can't verify that other than to say that theoretically it could have happened because the options did move that much. Whether that person really bought them or not, I just don't know. I can only say what we did. What I said, hey, buy them here, sell half here, sell the other half here, and that's how we made the money. So you can see that these are things, you know, you like to brag about this, you know, these things where you make several $1,000%. That, you know, that happens once. I mean, so far happened once last year, twice this year. Will happen again. This year, I don't know. I mean, but we'll be looking for those opportunities. But I don't want to start saying, oh my gosh, you know, we're gonna do one trade a month where we make over 1,000%.
And for those that are not really very aware, like basically what you do now, Matt, is that you analyze global markets, right? You're a global equity strategist pretty much,
Right.
and you provide research to institutional clients. That's correct?
Right. That's right. Yeah, we do. I do. I mean, it's again, I'm the strategist, and I'm talking to again some of the biggest mutual funds, hedge funds. I mean, I got a call. I was on Bloomberg 4 or 5 months ago, and I got a call from somebody, and they said Carl Icahn wants to speak to you. And I laughed and said, okay, whatever. And I said, sure. If you anytime you want to talk to me, give me a call. Well, 20 minutes later, the woman called me again and said, I've got Carl Icahn on here for you. We chatted for about 45 minutes with he and his son, and they get my work on a daily basis. So it's the again, I'm not start dropping names, but I dropped that one name. I'm sorry, but there's a lot of very important people, however you want to say it, but people who run a lot of money and who find my opinion valuable and pay and pay us for that for my work, and that's great. But I just think that this is a great way to get into helping others who don't necessarily have access to that kind of stuff,
Right.
and I work at a small enough firm where they allow me to do this, and so it's been a great thing. And if I worked at a Goldman Sachs, Goldman Sachs is a great firm. I'm certainly not saying anything against them. And look at Morgan Stanley, huge firm, and Mike Wilson's done very, very well. He's been really good in calling the markets this year. He and I have been on kind of on the same page for most of the time. So it's just that I work at a place that I've been at those big firms. I love working at a smaller firm where I have a little bit more leeway to do what I want to do, and they don't tell me what to think. Some firms, they tell a lot of their people is we're paying you to be bullish. That's basically what they don't flat out say it, but that's what they infer. And that's why most of the people on Wall Street are only now calling for a recession, even though I said we were going to have one in January. Only now, I mean.
Yeah, you were calling this, but way before when
I mean,
Microsoft.
in fourth quarter of last year, in December of last year, I say the market's going down at least 15 to 20%. Even if we don't fall in a recession, if we get a recession, it's going to be worse. Everybody else is saying that now. I mean, it's like after we're already down. Oh, well, if we go in a recession, it could be worse. I'm like,
right. And
so.
really quick, and for those, look, guys, if you feel maybe like, wow, like Matt's really advanced, or it's look, don't feel overwhelmed. There's a lot of education as well that Matt does. He breaks down a lot of things. So even if you feel overwhelmed, it's great because it means that you're actually learning some important stuff. And I'm telling you, this is some critically important things you should know.
Right. And like I said, there's no such thing as a stupid question. I mean, people ask, what do you mean breath? Bad breath. What do you mean? People, he's got, He smoked a cigar, so he's got bad breath? No. And so I explain what it is. It's very easy. It's just it's the number of advancing stocks versus declining stocks. And if the market is way up, but the number of advancing stocks that day and the number of declining stocks are actually negative, it means that only one or two stocks are holding that market up, and it's not going to hold up for very long. And so that's why I talk. But it's like, okay, how hard is that? It's like, it's just the number, the breadth of it. I mean, so if the breadth is really good, if we have a lot of stocks that are advancing today and the market's up, that's a good sign. If if a lot of stocks are down and the market's down, that's confirming, yeah. But all of a sudden, the stock market's down in a big way, but the breadth, the number of stocks that are up versus down, are actually positive or flat. That means that the market's actually doing better than what the indices are telling us. Let's get in there and buy. So that's why I talk about that. But it's like, if you're not familiar with it, there's no reason. Again, it's not hard to understand. But if you've never heard it, how could you know it? And,
right. Well,
so
the things that you explain it to them.
That, just to talk about, explain to people.
You break down the whole markets, and here's the thing. I remember we were doing a session about maybe a year or so plus around there, and you were talking about rates, the Fed, all this stuff. Where at that point, it was a long time ago, but like, I mean, most people didn't, like, at least retail traders, they didn't care. Everything was going up, like around 2020, around that time. So yeah, I mean, it was a different market, but now, and I remember that, maybe some people were like, it's this doesn't matter. Stocks are only going up, but now everybody's trying to scramble, figure out, and a lot of traders got burned because they didn't really understand those mechanics, right?
Right. And I've been through enough cycles to know, to see that I've seen it before. I saw it in 2000, saw it happen in 2008. I was there. I mean, I was not a rookie when the 1987 crash took place. I was a 5-year veteran. Now 5 years as a main veteran, but I certainly wasn't a rookie, and I knew what I was doing, and I saw what happened. I saw it in 2018. I saw it in the 2011 timeframe when we had the European crisis. I just saw what can happen, even though people are just, the fundamental backdrop looks great, but the fundamental backdrop looks great at tops and looks horrible at bottoms. I mean, horrible at bottoms. And what we've seen so far, as bad as it's been, really hasn't been that horrible. We haven't had any big blowups. We haven't had. We're now starting to get some cryptocurrency firms that are getting liquidated. But that's nothing, because they're still relatively small in the total scheme of things. You get some really big hedge funds, somebody has to liquidate, and that's when things get really dicey. And I still think things like that are in front of us. And one thing I just want to point, I've obviously talking about how I'm worried about that the market's going to have a lot more volatility. One of the things that is very important to realize is that since the financial crisis, every single major decline has not bottomed until there's been a significant change in policy. And we're not seeing that right now, okay? The Fed is adamant about, no, we're gonna stick with it. And so what am I talking about? Well, what happened in 2020? Obviously, we had a pandemic. The whole global economy was freezing up, and the Fed came in and changed their policy and said, not only are we gonna do QE, we're gonna do massive QE. Other central banks are gonna do it with us, and they pumped the market back up. That was a big, major change in policy. In 2018, which is the last time the Fed went through a tightening cycle, market went down almost 20%. So technically it wasn't a bear market, but they pivoted. Now they didn't pivot because the stock market was going down. They pivoted because the fixed income market started freezing up, especially the high yield market. And so people kept saying, oh, when the stock market goes down, the Fed will have it back. And I said, I was saying in November, December, the Fed put is done. And nobody was, I mean, they all thought I was nuts. I mean, I said it on CNBC, people were, behind the scenes saying, really, Matt, you really think so? And I'm like, they're telling us, they came out and told us they're going to end QE. They're going to taper back much faster than we thought. They're going to raise rates much quicker than we thought. And they're going to shrink their balance sheet much sooner than they thought. What else do you need to know? The market is, if the market wasn't crazy expensive, I would have said, don't worry about it. But the market was very, very expensive, second most expensive ever, most expensive on certain readings. And so it's got to come down. But the thing is, then I said, we needed a change in policy. Oh, okay, what about those other examples? Well, what happened in 2011, 2012? The market was down about 19% back then. In our market, the European markets were down more. That was during the European crisis. Remember, people were worried about Greece. Well, the ECB bailed out Greece. That's what changed it. Now, they really didn't bail out Greece. They bailed out the European banks because the European banks were loaded to the gills with all that Greek debt. And if that Greek debt defaulted on that Greek debt, the European banks, especially because they had still were very fragile following the the big the great financial crisis. So they since that was the big concern, they they came in, changed their policy in a meaningful way, bailed out the Greece, which bailed out the European banks, and the market bounced back. And what happened? It wasn't the Fed in 2009. The Fed was pumping. People don't realize pumping massive amounts of liquidity into the system throughout 2008. It still wasn't enough. That's how bad, how shaky the situation was in. But what happened? What the authorities did is they came in and they changed the mark-to-market rule. And the banks no longer had to mark their portfolios to market every single night. So therefore, even though assets went way down, when assets go way down, you have to raise more cash to keep your your things in line. So they didn't have to sell anymore. So there was that forced selling dissipated. I mean, literally the day that happened, the market bottom. Okay. So, and just look at a couple, I just want to go another example here. In 2016, we had 2015, early 2016, we had another correction. It was not the big sell-off I mentioned those other times. Now, this one didn't need a major change in policy, but it tells you what the difference of what's going on right now. Again, this was not a big, it was like a 14% decline in the stock market. Not a big deal. And it was not a particularly serious situation. What happened? Jamie Dimon, most powerful, maybe probably one of the most powerful men in the world, certainly the most powerful businessman. And he came in and said, I'm going to buy $26 million of my stock. Not the company's going to buy it back and it's some sort of a company buyback. No, at my own account, I'm going to buy $26 million JP Morgan stock. Now, he's worth a lot more money now, but $26 million is a lot for anybody, especially if you're a billionaire. But back then he was worth a lot less than that. He put a huge chunk of his own money into the stock. All right. That day, the market bottomed and it went straight up almost straight up for another year. It never looked back. Okay. And when a guy like that has enough confidence to buy that much of stock for his own account, that's telling you something. That was when the market was down 14 to 15%. When the market was down 14 to 15% a couple of weeks ago, on its way it went down even further and it's bounced back, but it's still down more than 15%. But when it's down 15%, he didn't come in and say, I'm buying JP Morgan stock. He said, hunker down, batten down the hatches. We have a hurricane coming. What else? What more do you need to know? What more do you need to know? Okay. We have one situation where the market is down 15% and he bought his own stock up the wazoo. Remember that commercial from the Super Bowl a bunch of years ago? He was buying his own stock up the wazoo, $26 million. This time around, he's like, batten down the hatches. Things are going to get tough. Okay, tougher. And that's when one of the most powerful men in the world says something like that. You got to take notice. So these are the types of things that we talk about in the chat room, what we try to help people learn, and why we're going to continue to have this volatility. I'll just tell you another quick story about one of the reasons why I turned bearish at the end of last year was when the Microsoft CEO decided to sell 2/3 of his holdings. He sold half at one point and then another big chunk a week later, but right at the high. I mean, he sold the number, he won't for him, but it was he ended up selling $375 million of his own stock, of the stock of his own company. Okay, nothing wrong with that. This guy is a great leader. He's a great, he's turned that. Microsoft was, when Bill Gates was running, it was an unbelievable company. Then it went through this big lull, but still an important company, but nowhere near what it was. Mr. Nadella, he brought it back. He deserves everything he got. He got all that stock, the stock went up, but then he saw that it had gotten too expensive and he saw what the Fed was going to do because they were finally telling him, yeah, we're going to make this big move. He sold the stock. And I said it at the time. I said it right at the time. People in the chat room will verify this. The people were in there at the time, and I know Rodrigo can verify this. I said, this guy is, nobody sells 2/3 of their personal holdings unless they think the stock's going to go down and stay down for a long time. He doesn't care if the stock is going to go down 20% for 6 months. It happens all the time, but he sees it's going to go down and stay. Not that it's going to go down for 2 years straight, but it's going to go down. It's going to be 2 years before it gets back to that level, or maybe longer. That's why he sells them. That's why I was pounding the table. Insiders, you got to look what insiders do. When insiders sell in a big way, you got to stand up and notice. And I can give you a million other examples of that. But these are the types of things that we talk about to help give us signals. Because again, I've been doing it a long time, not because I'm the brightest bulb on the tree, but we constantly trying to help people out, looking at taking the experience that I've had over
Right.
almost 40 years. It'll be 40 years in November. I always like to say 40 years, that's a long time. I mean, I'm getting a lot more gray hair. I kept away from the gray hairs for a long time because my mother kept her brown hair right until she died at 89, but that was she little wink wink nod nod. But my dad also kept the dark hair for a long time, but he's all white now at 93, 92. But anyway, but the point is it's there's a lot more to it than what they teach in the textbooks, and it's a really fun, exciting business. And we really try to capture all this in the chat room on a daily basis. And you know, there are frustrating days, there are frustrating weeks, but we've been able to capture some really big plays this year, and I think we're going to be capturing a lot more because of these situations that I've been talking about. Now, I'm going to get rambling here on a monologue, but there's just another thing that I talk about why, look, we got what Jamie Dimon did, where he, again, he bought stock back then. This time he's not buying stock. He's telling everybody to batten down the hatches. Okay, other situation though is that for me, what's going on here in the stock market is not pricing in a recession. I'm sorry. And there's some smart people saying that, but I'm like, that's not the case, because first of all, I believe only thing we've done is priced in the fact that the Fed is no longer providing massive amounts of liquidity. What that did is it allowed people to push asset prices and stocks to ridiculously expensive levels. Okay, so now that they're going to take that away, we had to go from 22 times earnings down to something that is more realistic with history, like 16 times earnings. I would actually argue it has to be lower, but even if you use the 16 times earnings is fair value. Okay, well, we're almost there. Yeah, well, but that's all we've done. Okay, because now people are expecting $228 of earnings, 229 for the S&P 500. That means it's trading at 16.7 times earnings. But those earnings have to come down. We all see what's going on in the economy. People, this is a supply-driven inflation. Okay, demand-driven inflation is fine, because if you're making more money, you've got a better job, you can afford the mild increase in prices. Demand-driven inflation is mild, and it's very, very positive. The supply-driven inflation, which this is because of the three things: the big change in the last, not just under Biden, but in Trump even let it happen, but also certainly started under Obama. I'm not trying to get political. I'm just saying both sides have done it. Is the big lockdown, the big change in capital spending in the extraction of oil. We do not have the ability to add to the supply globally of oil in a big way. It just isn't there. So we have that. That's number one. Then we have the supply chain issues from the pandemic, which is nobody's fault. And then, of course, the Russian invasion of Ukraine, which is Vladimir Putin's fault, but nobody, you can't blame the Fed for that. These things, and when they're supply driven, doesn't matter. That's what causes stagflation, because the high price, and we're starting, I've been saying this January, February, March, and people are finally saying, oh yeah, I guess it's like, yeah, if you're paying a lot more money for food and energy, because you have to have that, you have to feed your family. Okay, you have to heat your home. Down south, you have to air condition your home. You have to be able to drive your kids to school or to camp or to your job. You've got to be able to fill up the gas tank. And if you're spending a lot more on that, which we are right now, you have less money to spend on other things. And we're 70%. Our economy is 70% driven by the consumer. This is screwing us. Okay. And average American, I mean, I've seen different numbers. Now I've heard different people say more like 58%, but number I've heard and research is that 64% of the people in this country live paycheck to paycheck. Whether it's 58 or 64, what's the difference? There was even one that said 1/3 of the people who make over $250,000 a year live paycheck to paycheck. Okay, so if you're spending more on your food and energy, you have less to spend on other things, and so that's going to cause earnings to come down. My point is that as the economy slowed, GDP estimates for were over $4. I think we're over $4.40. Sorry, GDP estimates were 4.4% growth back in October, beginning of the fourth quarter of last year. Now it's less than half that. And people are looking for lower growth next year. How can you keep earnings growth at the same level? I mean, you can't, earnings are coming down. So if they instead of making 10% earnings growth, we only make 5% earnings growth, the market's really trading at 18 times earnings, not 16.7 times earnings. And of course, if it goes down to if they go down to break even, in other words, the earnings are flat, which would still be fine, which would still be good earnings. But
Right.
it's still, the market is expensive. It's trading at like 19, 20 times earnings. The market has to come down. So we got all these different reasons to think that volatility is going to continue very, very strong for this year, for the rest of this year. And I think really as we go into the earnings season in a week and a half from now.
Really quick here, Matt. Just want to give a shout out to Jim for joining here, newest family member of the Stock Picks Inner Circle chat room.
Welcome, Jim. Great to have you aboard. And it'll be interesting to see what happens tomorrow. Tomorrow could be a very, very exciting day. Friday could be a very boring day, so don't worry about that. But it might be exciting as well. Then the next week, things should pick back up with some great opportunities, and especially once we get into earnings season after next week's holiday week. But again, there's just so much going on right now, and it's okay. I mean, as bearish as I'm talking, this is normal. The Fed knows this is happening. I mean, they know darn well that it's. Why do you think all those Fed guys sold all their assets at the end of last year? That's another story. But anyway, the Fed had to know. But how do they know that was going to cause the market to have at least a deep correction? Because it always has, always. Now, sometimes there has been a delay. In one instance, there's been even like a 2-year delay. But whenever the market has been expensive, ever, at least in the last 50 years, whenever the market is expensive, and it certainly was expensive at the beginning of the year, once they start tightening, the stock market corrects in a deep correction every time. So there's no way they could possibly not know that this was going to happen, but they're like, we need to do it anyway. And this is exactly what happened in the 1970s. It was a supply-driven inflation. Back then it was OPEC, right? The OPEC oil embargo kept oil prices higher. And even though demand went down, didn't matter because it was supply that kept it up, not demand. Okay, and that's why it's going to stay up higher now as long as this Russian war, this war of attrition remains in place. Yeah, it can fluctuate a little bit. It's going to stay high. Inflation is going to stay high. Okay, that means the Fed's got to raise rates more, and that means earnings are going to come down, margins are going to come down. This whole thing with the retailers, they're sitting there go, oh, we have too many inventories. We bought the wrong things. That's baloney. That's their excuse to hide the fact that they were stupid when what they did is they came out and they realized, hey, inflation's getting really big. We have to buy all our stuff. Let's really load up our inventories now, because if we wait for our Christmas sales to buy all that stuff, it's going to be a lot more expensive in August. So back in March and April, they were buying and loading up their inventories. Now they're claiming that if they the reason why they over inventoried is because they wanted to do this. Okay. They wanted to load up their inventories because they didn't want to have to buy stuff at a higher price later in the year. You know what that means? That means they're not going to be buying anything later in the year. Okay, they're going to start willowing down those inventories so they can make space for more inventory. No, they know that now that the consumer is pulling in their horns, they're just going to sell what they have. They're not going to be taking new orders. They're not going to be giving new orders. Okay, that's going to trickle through the entire economy. Okay, they are big. These retailers, as one person said today, and in the chat room, who was I think quoting somebody from CNBC, it might have been. I'm not sure what, but anyway, they said, you know, if Target can't do it, it's one of the best run companies, retail companies in the business. If they can't do it, how's anybody else going to do it? And she's absolutely right. Okay, the reason why they did this purposely. They knew they were trying to buy their stuff for the full year. They're not going to be calling up their suppliers saying, send us more stuff. We had all these sales this summer. We got rid of our, no, they've got their inventory for the most part set for the year. Okay. And so when those suppliers are sitting there in August going, well, hey, Target, hey, Walmart, don't you want more stuff? And they say, no, it's like, uh-oh, we're screwed. And so all these earnings have to come down, and it's normal. It's healthy. It's painful and it's scary, but now we have the tools to take advantage of it. Let's be the people that when the, you know what hits the fan, later this year or early next year, whatever it happens to be, when we really get the baby thrown out with the bathwater, tends to happen in the fall. So we'll see if that's what happens again this year. If that happens, if not only do we have money, okay, because we moved into cash and defensive plays, but we've made some money. So that's good. Okay. Nobody's going to catch the exact falling knife at the right level. But the thing is, we will have the confidence to go ahead and buy for those great opportunities, the opportunities that took place in 2003, in 2009, in 1973, in 1987, in 2020. But if you're losing money left and right, and you're like, then the market bounces and it sees its ultimate bottom, and the market bounces 8%, most people are going to do, they're going to go, oh, thank God, it's bounced a little bit more. Now I can finally sell. We're not going to be doing that. We're going to be saying, we bought it. We actually bought a little bit at the low. Now we're going to keep buying as it goes up. And we're going to have the confidence to do that. From 2009 to 2012, and it might even been longer, but I know for those 3 years, money flowed out of the U.S. mutual funds. Okay, people were not buying. Why? Because they thought that the great financial crisis meant I'll never buy another stock again. Okay, every rally, even, and they say, well, how could the market have kept rallying if they were selling? Because it was the individual investor. All the institutions, they were getting their 401k money and they were plowing it into the marketplace. Plus they had all the liquidity from the Federal Reserve and their QE programs. But the point is, when this thing finally bottoms and the actual bottom comes in, most people are going to be selling over the next year or two. We're going to be buying. They're going to say, well, first of all, we don't know the exact lows, so we won't back up and spend 100% of our money, but we'll have some money to spend. Okay. And if we buy something at 10 and it goes to 20 and we double down, yeah, we'll be mad that we didn't put more money in at 10, but we'll have a stock at 20 that our average price is 15. Guess what? We're a winner. Then we raise our stock price to 16. We can't lose. We can't lose unless something weird happens. Okay. What if you do the opposite? And these people have been averaging down this year. I bought at 20. I doubled down at 10. Great. My average price is 15, but it's trading at 10. Okay, I've just doubled down on a losing position. What good is that? Okay, now I'm just hoping the thing comes back up. That doesn't work. We're going to have the confidence to get in there and buy the stocks. Some of these stocks that will be thrown out, the baby with the bathwater. They will be cheap, undervalued. Great prices. And not only will we have the money, but we'll have the confidence. Confidence is such an important thing because most people, even if they have the money, are like, I don't trust this. I got screwed. And again, these bear markets, the average one lasts 18 months. Looking at average level of a bear market is hard because some are 20 some odd months, some are 6 months, they kind of bounce around. So I don't put too much into that other than I see what's going on right now. And I believe that the stock market and the economy is going into recession. And therefore, we still have to further reprice the valuations and we'll go lower. Right. And we want to be able to take advantage of what is taking place. And then we want to be able to take advantage of it when we get one of those historic bottoms. We're not, the world is not coming to an end. And if it does, they start throwing nuclear bombs all over the place, we'll all be dead. So who the hell cares? I don't mean to make a joke about that, but the point is that it's something that we now have the ability to take advantage of. In the past, we just couldn't. Only the big institutions could make those kind of bets in the over-the-counter options market because they would make these big bets, and that's the only bets that were worth these big firms willing to execute because it was they just didn't. The only way they could make money off it was if the trade was a big one. So if you came in, even if you went if you went in and said, I want to spend $1 million on downside protection for the next 6 months, yeah, they probably would have done that. But I mean, tens of thousands of dollars, hundreds of thousands of dollars, said, no, it's not big enough. It's only the guys that want to do 15 million or 50 million or things like that. Now we can, with these ETFs, you can put $50 in and still make the trade. So it's great.
Hey, Matt, and I'm getting a couple of questions here from the viewers. So we're just going to go through this really quick. And I do have a couple of questions that I want to ask you about some things in the markets that we can get to right when we're done with this. Cool?
Good.
And by the way, thanks a lot for the questions. Folks, again, these are from you guys, the viewers from today. So a couple of questions here. What is the schedule for Matt's chat room? That's Monday to Friday, 9 to 5. And you do have the session live webinar just for the members. It's on Tuesdays for about an hour from I think about 10.
11:30. We are talking about doing it earlier, but right now it starts at 11:30 Eastern time.
So 11:30 a.m. Eastern goes for about an hour or so,
Right.
depending how the energy is there and stuff. And also, next question. Does everybody that joined get a free laptop? Yes. Is there a money back guarantee? Yes, 7 days. And the price at renewal the next year will be the same as it is today, 70% off. And that's pretty much the majority of the questions. It's all the same ones. So if you do have other questions, we'll put the email in the chat. Now, Matt, really quick, I want to ask you something. You and I here, we were talking about, the whole China Taiwan thing before everybody else was, right?
Right.
And you have a pretty good insight considering the fact that I mean, you look at global markets, right? Where do you see this going right now? And I mean, I don't see like I'm looking at the Intel chart as well whenever I see this because you've talked about that. But I don't know what are you seeing from that particular trade or geo trade, whatever you want to
Well, I
call it
mean,
there.
we have this situation here. This is, and this is again another. And it's not an options trade. It's a longer term trade that we talk about with Intel. But this situation is what are we looking at here? Are we going to start a war? I mean, I'm sorry, is not we going to start a war? Is war? There's some serious people, some smart and serious people who think that Taiwan is going to go. China is going to go after Taiwan now. I'm not necessarily there yet, but Z is Chairman Z is or she, whatever you pronounce it. The different people pronounce it a different way, but they have he's up for re-election again in November. Okay, now it's kind of funny. It's like, well, really re-election, but this will be the first time in several decades that somebody went more than a couple of terms there, and he will basically be named chairman for life. And that's he doesn't want some he wants to be looking strong going into that. Is he going to stand up to the U.S. between now and then? Does that might keep him from jumping into to Taiwan, but it also may want to give him reasons to act tough with the U.S. and stand up and create move up the stress. But what excuse me, what Rodrigo was talking about, this whole thing with Intel. This is the chart in Intel, which of course has not been a good one, and you can go back a couple of years here. You see how it's just not been good money, kind of been dead money. But the one thing where I like this on a longer term basis, though, is that look at the stock. Then it's it's funny because the chairman and the CEO has been saying this week, if we don't get this deal done where this helps finance our chip factory, basically a fab, a confab. I'm sorry, a fab. So the confab. But anyway, so they're building this factory, let's call it, in Ohio, and they're saying, hey, it's not going to be as big as we want it to be if we don't get this legislation passed. And basically the CHIP Act, as they call it, and it's because it's part of another thing. And it's like, this is going to get done. The stock's gone down because he's warned that, hey, we may not be able to do it. It's just his way of saying, hey, Congress, we need this. And I'm telling you right now, no matter what happens, whether it happens this year or later, this thing with China and Taiwan is coming to a head. Okay, if there's a war, we're not getting anywhere near as many chips out of Taiwan as we want. And if they take over, then we'll have not complete control, but they'll have a huge control over the chip making capacity. Taiwan Semiconductor, we get something like between 25 and 30% of our chips from Taiwan Semiconductor in the U.S. What happens if they can't produce those? I mean, you know how important the chips are for our economy? We need to have a chip producer, the chip manufacturer. Intel got out of the business. They're the only ones big enough, even though there are other companies that may be considered better companies. Their Intel is big enough they're the only one big enough to make chips. It's going to take 2 years just to build this factory. If they want to do more, they're also building one in Germany, but it's still in the Western world. But the point is that there are certain companies that are too big to fail. We learned that during the financial crisis a dozen years ago. But this company is too big, too important not to succeed. Not only are they going to be, because sometimes if you just bail a company out, they can kind of wallow through for a bunch of years and maybe you can take it over. No, they don't necessarily succeed. Well, these guys not only can not fail, and they're not going to fail because they're still a good company, but they have to succeed because we have to have chips made in this country. And as good a country as as good a company as Advanced Micro Devices might be, they don't have the capabilities of doing what Intel can do. Again, the government contracts, whatever it is, the government's going to make sure that Intel succeeds with this venture. And that's why you want to be buying we want to be buying this stock a little bit. Let's say you want to put it, whatever amount you want to put into the thing on a long-term basis. Split up into 12 pieces and buy it each month. You can pick a date, 15th of each month, every year for the next 12 months. Okay. And then and I'm telling you, a year from now, you're going to have, your average price. You don't know where this thing is going to, it's going to bounce around, may even go lower, but that average price, as they call dollar cost averaging, that is going to be something that you're going to have built a nice base in. And then when the next bull market takes off, this stock's going to go, and it's going to go a lot better than it has in the past because they're too important not to succeed. So these are some of the, again, part of the things that we talk about. It's not just short-term stuff, long-term, intermediate term. We're talking about these things in the chat room all the time. So it's something that we try to help educate people and give them some good ideas, and not just for trading to survive this tumultuous market, but also to set yourself up to succeed when the next bull market comes.
And that's really what I do like, Matt. That
It's not just
random trade alerts. These trades come, with the full backdrop analysis from you, Matt Maley, right? And even if there's the majority of it's buying calls and puts. However, somebody can ask you, hey Matt, what's a company with good free cash flow that I could hold for maybe 5-10 years, where I could just add and not have to just add, think about it as a long-term retirement thing, right?
Right. I mean, we had one today, which I'm going to make a tier 1 pick, is Boston Properties. We're going to use a tight stop of just 5%, but a long-term play, because I'm a believer in that the hard assets. Some people really think real estate is going to get hit hard. I'm not convinced of that. Now, by using a tight stop of only 5%, usually I'd put a 10% stop level on it. But it gets below 5%, get out, and then we'll move on, or I'll look for another entry point at some other time. But the point is, here's a company that they are in, first of all, commercial real estate. So you're a little nervous about that, but the stock's down basically 40% from its pre-pandemic highs. It's down 30% from its post-pandemic highs. So the big drop from the pre-pandemic highs is priced in a lot of that concern over the return, how many people are going to go back to the office.
Can you show the chart there for the?
Sure, yeah. The PXP. Now let's put it here. Okay, and let's go. Let me just go back. Oops. There we go. 2001. Let's just go back to 2015. We're going further back, but see now how this, obviously during when the whole, let me get rid of some of these lines because it becomes too busy here. That purple line is just the 200-day moving average, just so you know. But you see how it got crushed there because commercial real estate, everybody stopped going to the office. It fell out of bed. So, but it's still down 40% from that high. Okay. Okay. And now you can see how much has come down because of concerns over recession and higher interest rates. Okay. So a lot of that's built in. Now, just because something's down doesn't mean it's cheap. So you have to look at, so let's look at this. Boom. Oh, look here too. Well, before we do that, see how oversold it become on its RSI chart? Okay. And if we go to its weekly RSI chart, relative strength index. Oops. There we go. See how now see how it's basically as oversold as it has been in the last year. Now it did get more oversold during the pandemic. I just don't see it getting that oversold. Is it really going to get, when basically the whole, as bad as this recession might be, it's not going to be a situation where everybody stops going to work. Okay. Again, I just don't see that. So this is probably about as oversold. So I think it's a good entry point on a technical basis. Right. I just talked about the fundamental issues. And then I also like the fact that I'm also a believer that if we go into recession, people are going to be like, I talked to my boss on the phone or on a Zoom call, but boy, it'd be better if he saw me in the office 4 days a week instead of just 2. And I can chat with him when I'm at the water cooler or whatever. So he knows me better, because I'm telling you, we're having layoffs soon because we're going through a recession, and I don't want to be the person laid off. And so it's going to be interesting to see how that plays out too. So there's a lot of different reasons why I like this stock. And again, these are the types of things we talk about. This was brought up by somebody else today. And again, I'm still worried about it because the Silicon Valley, I'm a little worried about how much they're not going to have as much money to play with. So they won't put as many startups, but and they're involved in San Francisco. That's why I have a tight stop. But, and then the last thing, of course, is it, okay, let's go back. I'm sorry, real quick. I'll show you the equity DES pay. Okay, this here, see, 12 times earnings. Well, FFO it's a little different rating when it comes to REITs. But anyway, let's see, it's 12 times earnings, dividend yield of 4.3%. Nice dividend yield, nice fat dividend yield. Remember that gets taxed differently, 20% rather than whatever your particular tax bracket might be. So they pay you to wait. You got so that's a great play too. So there's a bunch of different things. It's kind of defensive, it's a little bit risky, but I think it's going to be a great long-term play. And if
Right.
things turn back up, it's going to surprise a lot of people.
Matt, what would you say is the stock that has been beaten up the most unnecessarily, right? For no, well, I don't know. I don't want to say for no reason, but a stock that has definitely been beaten down and might even have some more room to go down. However, still a great company, still good numbers, still a company worth looking into, and maybe just buying and holding, or you don't see anything with
I don't
that.
see anything where you want to back up the truck and buy it. But I do, like I said, with the Intel thing, let's buy a little bit now and pick away. Here's another one. You might think, what are you talking about? I mean, it's still a, the stock still trades at $2,000. But I mean, and again, it's just one where you see it goes down here, it's going to bounce around. But again, let's go back to the. I mean, Google is the future, man. Nobody wants to compete against Google, and Facebook. Well, again, 20 times earnings. Okay, that's above a market multiple, but it's Google. Okay, and they don't pay a dividend. That's okay. But the point is, there's one you want to. Meta, I'm getting a little bit more nervous about Meta. But I do like it on a long-term basis. I mean, look how much the stock has come down. I think that. They've come in, they've done the smart thing. They knew it was going to be a bad year. And they said, let's just throw the kitchen sink. Let's throw everything at it. Especially it's an election year. People thought that they would be a target by people running for office to say, they're say, well, if our stock's at all-time highs, we're going to have a big target on our chest. We have some problems anyway. Let's get it all out there. A smart move by Zuckerberg. Very smart move. So as we come out, you can see how the stock stabilized here. Yeah, it's down, but it's stabilizing compared to other stocks that are going straight, because they've already had their big sell-off. Their big sell-off happened early in the year. So and let me just look at here. Bang.
Are you and also are you worried at all about Apple?
I am, and it's funny. Again, not worried. Believe me, if you own Apple, don't worry about it. If you have your long-term account, it's fine. Okay, I'm just not going to add to it yet in a big way, the way I am with the other ones, because it hasn't come down as much. I mean, I just showed you. I put it is that Apple's trading. I'm sorry, Meta's trading at the old Facebook, trading at 13 times earnings. Apple's still in the mid-20s, and mid-20s is high for that stock. It's a mature company, huge cash flow, unbelievable company. But there's a difference between an unbelievable company and an unbelievable stock. The stock is still on the expensive side, and I think if we have some more problems, we have blowups and things like that, it will become a source of cash once again. So there's nothing wrong with adding a little bit here, but you can see it's been, it tried to make a higher high here and made a slight one, and then ever since then, lower high, lower low, lower high, lower low, lower high, nothing but lower highs and lower lows. Same thing here again. It looks like it's going to go back down. It's a great company. If you own it, fine. But I think you're going to have a much better opportunity later in the year to buy this thing. But when you do, it's going to be, it's funny because this was the stock. And when people were asking me in 2000 and I was just starting off being a strategist back in 2009, and what stock? And I go, you got to buy Apple. And it was funny because I said that a lot to a lot of retail brokers. And I just said, look, stop, just sit for a second. I said, you have a lot of people who are scared to death to buy stocks. And, you can get them here, but tell them to buy Apple. How many of them, just tell them to look around their house. If they've got kids, everybody's got several Apple products. And, you've probably got 3 or 4 iPhones, depending if you have a family or whatever. If you have a family, you've got 3, 4, 5, maybe 5 iPhones. You've got an iPad. You've got a Mactop. You've got a desktop, whatever, desktop, a MacBook Air, whatever it might be. They said, and just that will, they say, if you believe in anything, you got to believe in Apple. I'm not there yet because it's not as cheap as it was in 1999. And I'm sorry, in 2009. I don't think it will get as cheap, because I don't think we're going to be that kind of a bear market, but it's going to be a deeper one, and it's going to present a great buying opportunity. Don't get me wrong. But I do think that for technical reasons, number one, it's still expensive. So it'll have to get at least down to fair value. So that has to take it lower. And again, one of the reasons for that is that everybody believes in it. And that if you're buying anything, it's like, oh gosh, I'll buy. Oh, if I'm going to buy anything, I'm going to buy Apple. And I remember back in 2019, people were saying they've lost all their innovation. Believe me, I was pounding the table, buy Apple, buy Apple. In June of 2019, I'm like, I don't care, because the stock was cheap at the time. I don't care if let's go back here. They're not innovative anymore. Well, that's fine, but they're more cash flow than they know what to do with. And so it was right here. I didn't get the low here, but it was right in here. I'm sorry, right in here in June of 2019. And I was saying, look at that stock. Look how much it rallied there. So again, we see it's broken trend line. We go back to, let's take this here. We'll get rid of these things. We look at a lot of technical analysis. Is very, very important. First of all, technical analysis is fundamentally based, by the way. So don't let anybody tell you it's just a bunch of lines drawn on a thing, on a chart. They're based on fundamentals, because if somebody has a company, if they have a company that's just turning around, finally getting better after 2 years or 3 years of being downturn, well, great, everything's going to turn up, but it's not going to turn up on a dime, right? They're going to have to hire new people. They're going to have to rebuild their factories or retool old factories, close factories. That takes time. So when their business turns around, they're not going to show it in their earnings for 6, 9, 12 months. And so, but the institutional broker, investor, who's got an army of analysts working for them, they're going to know that they're going to do a lot better. They're not going to wait for the earnings to get better. They're going to see it and they're going to buy it. So we're going to use technical analysis as our army of analysts to tell us when these guys are buying it. They know something we don't know. Let's get in there. And the same thing on the way down. They do things right because people don't like to lay off people. They're humans. They don't like to lay off people. So their things turn down. The stock turns down before the actual things turn down. So, but here, see this broken important trend line here. You can see it's in a clear downward channel here. It's not oversold. See that on the RSI chart. A lot of reasons to be not adding to Apple at this point. If you own it, hold it for the rest of your life. You'll do great. But I'm not a big buyer of this name now, even though it's a great company. The stock is not as good as the company at this point in time, and that happens all the time. Great companies get their stocks get too far ahead of themselves, and lousy companies, which are still going to survive, sometimes their stock gets way too low. And even though it's not a great company, it's a great stock because the baby's been thrown out with the bathwater for whatever reason it might be. And when it comes back, even though it remains a mediocre company, when the stock comes completely cheap, it could be a great stock for at least a while. Yeah, there's other ones here. I've been rambling on here for over an hour and a half. So I like, if there's other questions and other stocks that we want to look at, I'd be more than happy to do that before we wrap things up. But I hope you're getting an idea of what we try to talk about and what we try to accomplish while we're here in the chat room, and what I'm trying to do to help people. Again, we want to do more than just weather the storm. We want to profit from the storm. We have the tools to do it. Why not take advantage of it? That's at least my thinking.
Right. And I think that's the correct thinking for sure. So, so we have Tesla, and then I think Tesla and Bitcoin to get started. In the
Sure,
meantime, folks, throw a couple tickers in the chat. We'll get some more.
Okay, here. Okay, Tesla. Okay, good. Okay, this is Tesla. Oops. I go to RSI chart. There's a lot of different charts. I always like to look at the RSI chart, but it's not the be all and end all. It's always going to look at several different charts. But okay, so you can see how it's kind of neutral right here on its relative strength index. So that does not really tell us a whole lot. But what we're trying to see here is that we're forming what's called a symmetrical triangle pattern. I'm going to get rid of these lines because there's too many of them there, and I'll get rid of the RSI chart because it's a very neutral. Whoops, what did I do? Okay, okay, good. Okay, good. Sorry about that. I just hit the wrong button there. And let's get rid of the RSI because it's very neutral. It's not telling us much. But what we have here, see how this, okay, let me widen it out so you can see it better. Okay, now, and I'll zoom. So you can see it, as I said, it's been in this channel going lower, but let's look at it on a much shorter term basis. We'll just go from the beginning of the year. Boom. Okay, now see here, it looked like it had been making lower high, lower low, lower high. Boom, boom, boom. No, we made a slight, it wasn't quite, it was a very slight higher high. See, a little bit higher than that, but not enough. Whenever you get whenever you break something to the upside, you want it to be more than just a few pennies because you get so many head fakes. And that was what this was. It was a head fake. And same thing to the downside. If it's a support level, you're right below it. But you can see, so this really wasn't a higher high, but it came close. I mean, and then we went back down. But here, this low is higher than this low. So we got a higher low. Is this going to be something? But we need that other thing. Higher lows and higher highs are always very good. Lower lows and lower highs are very bad. Here's the situation. Can we switch that trend of lower highs and lower lows and make a higher low and follow with a higher high? Well, it looks like we're not going to be able to do it. See how it's starting to roll back over? That's, again, another lower low. So we're going to be watching this area here. The lows, and let's just look, those are the intraday, bar charts. Let's go to the, again, this has nothing to do with what I'm looking at in terms of, in terms of whether it's a good company, whether Elon Musk, gosh, I mean, we had a thing, people get, I don't mean to be, they take it personally, and I don't mean to be, but as a person, back in here, I was saying, this stock could drop below 1,000. The person said in the chat, just thought I was crazy. And I was like, how could you say that Elon Musk? I'm like, there's nothing wrong with Elon Musk. And I'm not saying the company's not succeed, but its RSI chart had become ridiculously overbought here. And I just felt it was going to sell off, especially when it made this lower high up here. I said, we're going below 1,000. And then of course, and I said, it could even go down to 800. A couple of people thought I was out of my mind. That's exactly what happened. Again, I don't try to be, it was not a comment on Elon Musk or what the long-term prospects are for Tesla. It was just that stocks, and I was kind of saying, how could you say it's impossible when the stock has seen 24, more than 2, I mean, that's Amazon seen 2 dozen, but dozens of corrections of anywhere from 20 to 60% in the last several years. How could you say it's impossible? I can see why you don't believe it, but to say it's not possible, it doesn't make any sense to me. But anyway, let's go back to the shorter term thing. So we're going to be looking at these lows. It seems to be rolling back over, right? At that lower high. If we break below this low and make another key low, this stock's going to get down to 600 rather quickly. So again, it's a stock that went too high because of all the liquidity too high too quickly, because of all the liquidity that the Fed had added, and now that it's taking away in a significant manner, the stock has to come down a little bit more. I think it's going to break this level and get down. I think you're going to get down in the 600s when it becomes a really, a great opportunity. Doesn't mean it's going to happen immediately. Doesn't mean it can't rally back to 900 before it goes down there. Right now, the next, we'll see what happens tomorrow, because the fact that it couldn't hold above 700 is a concern. If it can, tomorrow's going to be a key day. If it starts to go down again, this is a stock, if anything, I'd want to be buying a few puts in, buying some protection, because it looks like it wants to go down, at least test those lows, and they're 630, maybe we drop to 600. Long term, it's got nothing but, I just hope that Tesla, that Musk will get away from this Twitter thing. Is not helping the stock. It's not helping the company. It's keeping his mind on other things. It's just not good for him and for the company. But I think it's something that sidetracked him, not completely taking it off course. So
Right. So it's interesting, man, because some other companies have that where look at Bezos, look at Gates. At some point, these people get so rich and they get bored and they want to do something else. And I guess this guy it might happen at one point, right?
Well, it could. He doesn't seem like the type of, because he's involved in so many different things. But that's the other part of it, is that he's gets so involved in something else that he decides that's going to be his baby. I want to put people on Mars and build a colony on Mars or something like that. Something he's talked about. But it's just a concern that he's not, that this Twitter thing is not, that's just when he's doing his moonshot thing, but at least that's business. It's this is this Twitter thing. And it's great that he thinks that that he wants to change Twitter for the better so that people can get, people aren't muzzled on one hand, and on the other hand, the people, they can, get some of this false, this false news and stuff, that the fake news that they talk about, try to get rid of that. But it's, you can only juggle so many things at once, no matter how smart you are and no matter how visionary you are. And so that's just a concern for me right now. And it's a very legitimate concern. It doesn't look like it's going to be resolved anytime in the next couple of weeks. And until it is, this stock's going to have a tougher time really rallying unless the entire market takes it higher. Now, you mentioned Bitcoin. The thing I'm looking at there, what I'm worried about right now, we had Jeffrey Gundlach. I don't know if you guys are familiar with him. He's well known in Wall Street, very well known in Wall Street, billionaire hedge fund manager. His expertise, or where he made his mark, was in the bond market, but he's made some very good calls on many other markets over the years, and especially in the last recent years, 4, 5, 6 years, or even longer. But you see what I'm worried about, and he's calling for it to drop to 10,000, that might be a little aggressive, but I'm worried that he might be right. Now, see what happened here. Market, it's stabilized for a month or 3 or 4 weeks, then fell again. Stabilized sideways, worked off its oversold condition, fell again. Now we're working on this another sideways movement here. Whether that lasts another week or two, the thing is, much like it is with Tesla, this Bitcoin and other cryptocurrencies were pushed too far, too fast by this massive liquidity provided by the Federal Reserve and other central banks. I'm a believer in Bitcoin, and I think Bitcoin will like to survive. I think Ether will. They all won't, though. But there's 9,000 cryptocurrencies. The people who make that comparison. I hate to be talking like the consensus on Wall Street, because the consensus is usually wrong. But I think they're right when they say that these cryptocurrencies are going to be a lot like the internet stocks. The ones that succeed are going to do wildly well, just like Amazon has. And then a lot of them are going to cease to exist. And remember, Amazon changed the world. One of the most successful companies in the history of the world, and it went down 90% when the dot-com bubble burst. I do not think these things are going down 90%. Don't worry, but they can go down further. 10,000 is possible. Is possible. And I think they had somebody else said something that said 8,000. Another person said 14,000. Whatever. It does feel like it wants to go lower still. And again, because we have all this leverage that has been wound up to it, and it's, we had this liquidation of that one fund last night. It's holding up remarkably well given this news. But again, that unwinding of leverage, I think, has got to take it down. So that's my feeling. I think my feeling is more in the 14,000 to 15,000 range. Jeff Gundlach's a lot smarter than I am, a lot richer than I am, so maybe he's right at 10,000. But like I said, you tend to overshoot when you're deleveraging, and so 10,000 is possible. I think it's going to be very, very tough for it to get back to 3,000. I'm sorry, to 30,000 in the near future.
You think it can get back? It can get to 5,000?
No, well, I shouldn't say. I'd be shocked if it fell that low. I'd be shocked. I just, although boy, anything's possible. I mean, listen, Warren Buffett, he might be 93 or 4, wherever he is, but he still seems sharp as a tack, and he and his partner there think it's worthless. So,
isn't there a company? Isn't there a company that has a like that might get margin calls or something below 21,000? I don't.
Well, yeah, that was the thing. Michael Saylor's company, MicroStrategy. They were saying it was below 21,000. Then they were saying 20,000. It did dip below 20,000 for a New York minute last night. It seems to be holding that. But yeah, that's one of the concerns too. 5,000. Anything's possible, but I'd be surprised if it fell that low. But because again, a lot of the leverage has already been unwound. There wasn't as much leverage in this one, and so there's less leverage that has to be unwound, even though I think a lot more does. But compared to the overall stock market and in the fixed income market, that will need to be unwound, and that's I'm more worried about that. I'm so worried about bigger falls there. But let's face it, you go to 10,000, that's another 50% downside. That's a lot.
Okay, I mean, we could continue in a downward. Like, I mean, regardless of what happens, right? Like, I mean, you still can profit trading in the markets, but like, as far as like, where do you think the macro is going? And like, if we continue getting, worse numbers for a year, Bitcoin, do you think like, is it just going to stay flat for a whole
No, I
year?
think- I
Or
think I think we trade lower. I think we're gonna get into this sideways action we got here was followed by a down. I think this one here, followed by a sharp decline. I think the next one's gonna be followed by another sharp decline.
so it's
And
it's definitely not an inflation hedge then, like people were saying.
no, no, the problem with them people calling for the inflation hedge is they didn't realize that it was that a lot of its success, a lot of the level of success was simply due because we had a huge injection of liquidity in the marketplace. Just look at this here. Let's go back here. I'll show you something. And again, would it have gotten there eventually? Sure, but it got there too fast because of all this liquidity. Now look what happened here. So in 2020, it started going. Okay. It started really wrong, but then okay. So what happened here is it rallied along with everything else, but then all of a sudden, as we got into 2021, we knew we put this, we set the stock market up and all these other assets artificially high. Everybody knew it because the economy, global economy went to a complete halt. Okay, then it started coming back, but instead of, but they kept adding liquidity, so the economy could never fully catch up. So what happened was a lot of stocks, right in here, as we got to the end of 2020, a lot of stocks were becoming, it's like, okay, they've gotten back to fair value. Now, of course, they went higher than fair value, but what's really moving? I've still got all this liquidity. I got to put it somewhere. And so they started going into some of these assets. They went into the big cap tech names, the FANGs, and that's why these things just skyrocketed here. It's not a coincidence that it saw most of its rally during a time frame where the Fed was providing emergency level of liquidity long after the emergency had ended in the economy. And so they didn't want to go. It's like, well, let's go with the momentum thing. And they went into this and the meme stocks and some of these crazy things. And it just got them. Of course, technically, even though it's a little bit higher, it's basically a double top, and it made a lower low below 30,000. This is not good. It's it's not an inflation hedge. I don't think so at all. Of course, gold hasn't been an inflation hedge either. But people have to remember that in 2008, gold went down then too, before it rallied strongly. So don't give up on gold, but we still have to see it break out before that happens. It may be a couple of weeks, it may be a couple of months, who knows? But at some point, I think gold's going to break out in a big way. And we'll be there when it does. But right now, we're still holding off.
Okay, all right. And now the next one we have here, interesting one. Well, we already covered AMD, Brandon. Let's do okay, next one we have PayPal.
Well, that one got hit again today, didn't it? The last I saw it was, now again, it's starting to flatten out. Okay, it's just obviously been absolutely crushed. It's just the thing for me is that I don't think they're going to go out of business, but maybe Google's going to or Apple's going to change the situation. But what I'm looking for, and it may be too simpleton, is that look at this thing. Let's get rid of some of these charts. Bang, bang. Okay, this yellow line is the 50-day moving average. Look how it got a little bit above, got a little bit of head fake there, came back down, got right up to it there, couldn't go any higher. Got right up to it there, couldn't go any higher. Got right up to it and rode it for a couple of weeks, couldn't get above it. Got right up to it, actually got slightly above it, but remember I said you got to have a meaningful break, couldn't get above it. Got right up to it there, couldn't break above it. Got very close to it there, couldn't. So I'm just basically looking at this saying, if this stock can ever get meaningfully above this 50-day moving average, every algo in the world is going to say, let's buy this thing, and it's going to shoot back up in a big way. Believe me, there's some things I'm starting to worry about. Suddenly, Carnival Cruise stock's below $9. Oof. Peloton, nobody wants to buy them. I'm gonna talk to Apple or something. Maybe somebody will buy them. I think they'll eventually get bought up, but it may not be until it's a lot lower. But PayPal, I'm just not as worried about them. They have a good business. And I just want to see where it's trading at 19 times earnings, still not dirt cheap. I'm sorry, 18 times earnings. Again, so it's not crazy cheap. But I'm watching that 50-day moving average. It's just no question in my mind. And maybe that's too simpleton, but it's like trying to buy it on weakness due to its fundamentals has not worked. Why would I? If it's not going to work, then, and if I'm wrong and I miss it, believe me, if I'm wrong and I miss it right here for a reason, well, I'll only miss it for a little while because it will, if it will break above that 50-day moving average, and I'll jump in a little bit later than some other people. I like to be as early as possible, but this is just one where too many times people have been saying fundamentally this thing's got to be a good buy, and it just hasn't. So look for that 50-day moving average. That's going to be a big one for PayPal, and that's when people will. Until that happens, not enough people are even going to care about their fundamentals. I know that sounds crazy, but I do think that's the case. So you're looking at PayPal, watch that 50-day moving average. If we finally break above it, when we finally break above it, whether it be next week or a year from now, it's going to be a great opportunity for the stock.
Right. Right. Interesting. Question here. Where do you see oil going based on just how things are going overall?
Okay. Well, oil, well, I have certain personal beliefs, and I don't want to get sound too. I don't want to get too. I want to say critical, but you know, we have had the situation where we don't have enough. We just don't have the capabilities to produce enough to meet demand, and you know, demand's going to have to really, really drop off for oil to drop off and gasoline prices drop off in a significant way. So on a fundamental basis, that's a big problem. The second big problem, of course, is the situation with Russia and the sanctions there. And this looks like to be a war of attrition. And from everything, most of the things I read, some people say, "Oh no, they'll be able to get out." I mean, in many ways, Putin's winning. I mean, he's, let's say, winning the war, but he is putting the screws. Europe is a big problem next winter, and especially on the gas side of things. So they're going to have to get other sources. But if they're not developing the supply worldwide, it doesn't matter if we get enough to Europe. It's still going to be high because we're going to have to take it away from somewhere else. So I just think the supply demand situation is such, and that now that this is well, it's been known for a while that it's a war of attrition. They're just going to bleed it out, and that's going to take too long. And you know, even if they get a ceasefire, again, if it's a ceasefire by itself, even that's not enough. Although I would guess a true ceasefire would have to come with some relief on the sanctions, or Russia wouldn't agree to it, a ceasefire, and therefore that would be both. So don't get me wrong, I will definitely change if the situation changes. But again, this is a supply issue, not a demand issue. Oil usually moves with demand. And so that's why people always say, they're always wrong when they say, "Oh, oil prices going up, that's bad for airlines." It's like, no, it's not. Because usually oil goes up because demand is higher. That means more people are flying for vacations or for business, and they actually do better more times than not. Not always, but more times than not, when oil prices are going up, airlines are going up too. But when it's a supply issue like it was in the 1970s, that's a big difference, because then if it's not demand related, then all it's doing is raising their costs. And especially if it lasts for a while and they can't completely hedge themselves like a lot of airlines do. So the situation right now is that because it is a supply issue, not a demand issue, and the supply issues don't look like they're going to change anytime soon, we're not going to be able to produce enough oil. OPEC's not going to be able. And this stuff about price, I mean, come on. And every legitimate person I've read and talked to in the last 24 hours about the G7 putting a price cap on what Russia can sell at price, it's just crazy. It's that they still have China and Russia. I'm sorry, China and India are going to continue to buy this their crude. They're going to be fine. They are discounting it, but so they can sell it, so they're getting good prices. But it's not something that it's going to be still priced very, very beneficial to Russia. So to put a price cap that will cause problems, or that will take oil prices and gasoline prices considerably lower for the U.S. Consumer is not realistic. It's a pipe dream. They can run around and blame the oil companies all they want, but they're not gouging. Their costs are going up, so they're charging more. I mean, and their profits, they had more profitable years during the Obama administration than they had now. So that's a false thing. And then the other thing, of course, is the food. If we start getting food shortages this year, maybe not in the U.S., but around the globe, it's going to be. Then we start talking social unrest. Then we got real problems in the marketplace. But my point is that Ukraine is the breadbasket of the U.S. of Europe, and not of the U.S. We've got plenty. So, but wheat, soybeans, etc. This is going to keep inflation high. So, but going back to the oil situation, the supply side isn't going to change enough for oil prices to come down, even if demand comes down a little bit. It could. So I think, the people saying 150, I think that's very doable. Whether it gets there or not, it doesn't concern me, because if it can stay in this 105 to 130 range, that's still negative for inflation, positive for the energy stocks, and positive for the commodity players. And I'll just say one last thing about this whole commodities issue. These people starting to say, "Oh my God, everybody's worried about inflation." You can see it. These oil prices. Look how oil's come down, wheat's come down. The economy is yes, that has had an impact. But guess what? Look how overbought oil was. This is why I turned negative on the group in here. Actually, I was a little down in here. The group, I turned negative on the stocks. Oil kept going over, but the stocks did roll over. So it worked out really well. But look at wheat. Okay, wheat. Bang, look how overbought it got. Of course it's been coming down. Okay, people are saying, "Oh, it's because of the economy." It's only partially because of the economy. A lot of it has to do that people got way too leveraged, got way too bullish. Bullishness in the wheat was over 90% in here by futures traders. It was overloved, overowned, overbought. It had to come down. And yes, so part of it is because demand's come down, but not a lot, because there's still a major supply problem of wheat in the world. Okay, same thing in corn. So when these people keep talking about that we don't, we're not going to have to worry because inflation is going to come down in a big way. It's like they are misunderstanding what really happened. Again, see how earlier this year how overbought corn got. So now it's oversold. Now, sure enough, it's stabilizing at a much higher level than it's been in a long, long time. Same thing with wheat, natural gas. Well, natural gas again. The other issues they came down because they got. Oh, let's look at natural gas. Oops. Oops. Commodity. Sorry. Remember how I said how overbought that wheat was, and see how overbought natural gas got even keep rallying, but it stayed overbought. And then let's look at its weekly. But it had to come down. There were just too many bulls and too many people own it, and nobody was short it. I have a delay here. I'm not sure why. Here we are. See how overbought it got in early June on a weekly basis. It's back same as it was last year, or close to as it was. These are technical moves to the downside. It's not a big fundamental move. We're not seeing a big fundamental decline that's going to last for a long time in the commodities, especially the ones that matter to stagflation our economy. Copper, Dr. Copper is important because it will show that the economy is slowing, but that's because demand will fall back down. It won't. If demand falls, that's not the reason these prices are up for food and energy. So it's not going to help anywhere near as much as it will for copper coming down. So inflation is going to stay there, and we got it's going to cause more problems. Again, a lot of smart people saying that we have a lot further to go. I've been saying it for a long time, and a lot of people now seem to agree with me that have been very, very successful. So again, that's another reason I think things are going to be tough for as we go through the summer and into the end of the year. Will we get the washout move like we usually do in September, October? Maybe, maybe not. I just don't know yet. But that might. So the next big great buying opportunity might happen in the spring, in the fall, but it may not happen until the usual 18 months have passed. Who knows? But we're going to see some big rallies in between now and then. We want to be able to take advantage of them as we have several times this year, and that's really the way we're going to play it. But
Right.
anyway, sorry, buddy.
Yeah, no, Matt, just wanted to ask you something real quick here since you're talking about that. So, so overall, right? Overall, since there's the transition from oil to natural gas, I think I'm not 100% sure. I'm not a green scientist or nothing like that. But isn't the natural gas kind of cleaner, and that's kind of like the most immediate kind of thing to
Well,
move out of.
it's definitely cleaner, but it's still a fossil fuel. It's going to go away, and we're trying to get things that are clean, even cleaner than natural gas. Number one, and number two, something that's renewable. The sun, the wind, water, whatever. I mean, the big problem with wind. I mean, it's a great. It's actually very, very good, but you can't transfer it. You can't run it through a pipeline. If you live in Western Texas. And right where the mountains come down. I mean, El Paso, Texas. Man, you're never gonna have to worry about. You got all the wind in the world. You're gonna have plenty of wind forever until millions of years before the mountains disappear or something. You don't have to worry about that. But you can't. They've got to come up with a way to transport it. And it is transportable, but it diminishes dramatically as they do. And so that's the thing. It's because it doesn't. We will never lose. Wind. We will never lose sun. The water will keep flowing. But those fossil fuels will disappear. And in 100 years, 100 years is not a long time from now. They say the first person to live to 150 has already been born. That's a short period of time. So that's natural gas is not the long-term answer, and that's why we're still looking at things. But the problem is not just the U.S. It's not just the Biden administration. It's been other administrations and other governments around the world who not only missed out that we can't just immediately switch to clean fuels. We haven't invested enough money or given the opportunities to the areas, methane, certain these other areas that are bridges between the dependence on fossil fuel and going to full clean energy or mostly clean energy. Even nuclear is another way, which again that has other implications. But right. there are these bridge things that people just aren't even focusing on. They need to focus on them right now. Okay, because it's going to be 20 years before we're out of fossil fuels. So anyway, again, I'm on when I turned bullish, I'll never forget when I turned bullish and people thought I was nuts. They said, "Are you kidding me? It's a dying industry. Fossil fuels, nobody wants them, nobody owns them." And I was like, and exactly because I know people, I know some people who I'm very close to who are in that business, and they're like, "There's no way we can get to clean energy by 2030. This is not going to happen. It's not going away as much as we want it to. Believe me, I want to. But we can't." And I was like saying, we got to buy these stocks. And of course, they've been the best performing group since I mentioned them, since I pushed them and I was pounding the table on them. You've got to look at the realistic world, not the world we want. We want to, when we make our goals, we look at the worlds we want. But we're making our investments, especially when you're making intermediate and long and short-term trades, you got to look at the real world, not what the world we want. And there's been a major mistake by our leaders around the world trying to make this transition from fossil fuels, because you can't build a refinery. It takes 10 years to get your money back. They've already told us you're not going to be using that refinery 10 years from now. Why would anybody build a new one? Crazy. Anyway, I'm kind of rambling on here. So we're going for 2 hours, but maybe one more name or something we can flap up, and we can just wrap it up. But I just think that we it's just an unbelievable time. We're heading into a little bit of a lull here, but as soon as we get earnings season starts again, and we're going to get more data points and more inflation numbers and more Fed stock, and more earnings reports, and then we're heading towards the midterm elections. The volatility is going to be really high, and we've been able to capture it very, very well, these moves so far this year. And I think there's going to be great opportunities in the years ahead. So I hope you'll think about, for those who have joined, thanks a lot and welcome aboard. And I hope you'll enjoy it as much as the people who are in there already have, and profit from it. And it's a very tough time in the marketplace. And I think when you're with a group of people, it's not just me rambling around, it's people talking all day long, back and forth. What about this? What about that? I think this, I think that. Gives you many views to pick from. And you're not just listening to people who, for the most part, in the financial, the financial press is good about pushing these people. But let's face it, if you're working for a money manager, you're working for a big bulge bracket brokerage firm, in most cases, you're paid to be bullish. That's what they want you to be. And And how can you, I don't know if some of them just didn't see it. Others saw it, but knew that it wasn't good for their price, for their job security to call it. And that's why nobody ever calls, no Wall Street person ever calls, or almost no Wall Street person ever calls for a recession until we're already in it. They say, oh, well, I don't see one this year, or that's not my base case. And then finally, oh, well, here we are, we're in a recession. And I said, well, I don't think earnings are gonna come down unless we go into a recession. Well, we're going to go into a recession. We're probably already in one. We have stagflation. Earnings are coming down. They don't have to come down a lot, believe me. They don't have to come down a lot to make the stock market expensive, okay? We're not looking for 30% growth down to zero. We go from just 10% growth to zero, or 10% growth to 5% growth. The market is very expensive. That means a lot more volatility and a lot of fireworks. So anyway, that's really what I've got. I hope you'll stick around. I know Rodrigo's going to probably show you. I think he wants to show you the site so you can get a look at that and see what we do. Rodrigo, are you there, bud?
Yeah.
And we'll take it from there. But I wish you all the best of luck. Happy 4th of July to everybody out there. And it's an interesting time in the markets, and more than that, a fascinating time in the markets. And we have a lot of people who've done very, very, very well in the markets over the years who are telling us that there's a lot of things still to be worried about. And so instead of worrying about it and sitting at home, let's and just staring at the ceiling at night, let's be active participants and take advantage of it. So thanks again, and thanks, Rodrigo, and we'll talk to you on the chat and talk to everybody else soon. Good luck with everything, and again, it's going to be the second half of the year is going to be just as interesting as the first half. Let's be the people who take advantage of it, rather than the ones that get taken advantage of.
Definitely, man. Hey, thanks a lot here for your time, Matt. I know you're a very busy guy, but look, you do a lot here for the retail community, and they're all showing the love here. So we'll see you in the chat tomorrow, man, and I'll just show them around a couple things here.
Great, thanks, buddy. We'll talk to you soon.
All right. There you go, guys. Matt Maley, Chief Market Strategist at Miller Tabak, right? Prior to that, head of trading at Merrill Lynch, where he managed Fidelity and BlackRock, two of the biggest accounts in the world, two of the biggest funds in the world. And prior to that, trader at Salomon Brothers, which was one of the most important trading desks in 70s, 80s, pretty early in Wall Street. I think like even before computers, to be honest. I mean, I think so. So he's been around for like 40 years in Wall Street, right? So this is a career man, right? Someone that's been dedicated his entire career and time in life for this, right? So I think that's really good to know, at least, right? If you are going to sign up and trade with Matt, just so that you kind of get a backdrop, right, of really who, what he's been doing, his training, all that stuff, experience in Wall Street. And of course, you do know that he's on CNBC and Bloomberg all the freaking time. And look, these I don't really watch those places, but if Matt is there, then I'll definitely watch it for sure. But yeah, in the chat room, we're there Monday to Friday. It's 9 to 5, and you can be there the whole day. You can see that there's two channels here. One of them is the Inner Circle chat. That's where everybody's posting, everybody, including Matt, right? However, there's another channel here called Matt's Important Messages. And here you will find entries, exits, brief market commentaries, market analysis, trade updates, right? And pretty much everything. And only Matt can post here. So there's no confusion. And it's really easy to find the trade. You don't have to scroll for 15 minutes to see what's the last thing Matt said, because you have a full timestamp verifiable moment when he's going in, going out, what's the contract, expiration, strike price. And many times, several times, almost always, you're going to see that, if it's like a small position that he's adding in, right? You'll see it there. It's now solidly in the medium-sized position level, even the upper side of medium. So he's telling you that they're for specific trades, if he's doing small, adding to medium and so forth, so that you kind of get a sense, right? If it's a serious position or if it's not. So yeah, I mean, pretty much, right? You have a full display, right? It's all out there in the open. You have a timestamp there. And keep in mind, these trades are pretty fast for the most part, maybe throughout days or whatever, but like, you do want to make sure that you're in the chat room when you have an open trade for the most part, so that you get the best entry and exit. That's by simply mirroring Matt's trades that he's going to be posting here, right? So that's all you have to do. All you have to do is have this window tab open. And Jeremy, good question. Yes, everybody that joins will get a free laptop. That's how it is, correct. But yeah, I just wanted to show you this, guys, really quick. So that's how the chat room works. There is a sound alert, and if you do want to activate it, you just have to pop in here on the sound control side, and you can also manually select which chat room, which channel you want to have the sound alerts. The other thing I wanted to show you is that you have some charts here in the bottom, right? You can pull this up here on a separate pop up there. You just click there. And the other thing is this scanner. The scanner, you won't find it out there in Benzinga because we built it just for the inner circle members. And I'm not saying to go buy everything here, but you can find some interesting trades on the short and long side on both sides, right? Just to see what's out there, what's moving, what's not moving, and just see what's happening, right? To see what's happening with that. But for the most part, guys, you're going to be trading with Matt, the indexes, right? And it's very simple options, right? We're talking about buying calls and puts, the most simple type of options trade that you can make. So I'm going to put the contact below really quick if anybody does want to send a question. But if you do want to send a question, we can answer it here as well before we do close this out. But I'm going to put that there in the chat for you guys. All right. And feel free to reach out. I hope you guys have a great week. Enjoy the rest of your day. Stay safe. Trade responsibly. Of course, highly recommend to trade with Matt. There's a 7-day money back guarantee. I think you should take it. It's basically risk-free at that point, to be honest. So I don't know what more you would need. But yeah, let me know if there's anything else I can help you with, guys. Have a great day. Thanks for being here. And we'll see you in the chat room tomorrow.